we are not using Campfire today. The only reason is because it gets a little bit confusing because some people log into Campfire and then some people don't, and then we get questions in both GoToWebinar and Campfire. Okay, so and also to keep the flow of the presentation going the way we want it to go, we're going to make sure that we only have questions in GoToWebinar. That way, you know, I can come to the questions as I please. Yeah, Simon, look, if you guys are making a recording, that's excellent. I noticed sometimes we've had some of the other guys in the trading room make their own recordings, and that way it's brilliant because you can always refer to it straight away, because it might take us a couple of days, you know, to process the recording and send it out. So you can always make your own recording, and if you guys have a better recording, you know, that's brilliant, right? Okay, Brian, I'm just waiting for Brian. Just give me a go ahead on the chat panel, Brian. Okay, when you can. Or in the questions and answers panel, just let me know when you're ready to record. Okay, we still keep seeing people logging in here. Martin, you're back in again. Can you hear me still, Martin? Mate? Yep. Yep, Brian's good. Okay, we're all ready to roll. Okay, no more delays, guys. Let's get ready to roll. So welcome to the L2ST Precision Trade Execution and Management Strategy with Orderflow. Now, I call this a strategy, okay? Now, it's not like your mechanical strategies. No, Mikkel, everybody, guys, right? We can ask questions in GoToWebinar, okay? All you guys ask questions in GoToWebinar. And we're not going to be using Campfire today, so I can see your questions. Mikkel, the rest of you guys, we're ready to roll. Okay, let's go. Okay, brilliant. Okay, quick disclaimer. You can make loads of money trading, and you can also lose loads. Okay, well, that's a short version of it anyway. Let me just read through this quickly. L2ST does not have any knowledge of the trading needs or objectives of individual viewers of this presentation. This presentation represents suggestions, training, and information for viewers to use when evaluating and making trading decisions in light of their own individual trading goals and does not constitute specific advice. L2ST does not take into account the trading objectives, financial situation, needs of any particular person, and before making any trading decision on the basis of an L2ST method or of trading, the prospective trader needs to consider, with or without the assistance of an advisor, whether the advice is appropriate in light of their own particular trading needs, objectives, financial circumstances. Trading the futures markets involves risk. Both money can be made and lost. Okay? What we're here to show you today is how to not lose your money, but make it. Okay? So although you can lose money, obviously none of us really are involved in this business to lose money, right? I suppose all of us can agree on that. Okay, so what we're actually focusing on today, and actually what L2ST is all about, our sort of niche in the trading business really is focusing on trade execution and trade management. That's what we're all about. Okay, now we do focus on market profile and option theory. However, we do focus most of our attention on what the majority don't do, and the majority, not in terms of just trading, but also educational firms don't focus on, and that is trade execution and trade management. And that is what all today's webinar is going to be about. Right, guys, I've really put my heart and soul into this, so I really hope you guys are going to appreciate what I've put together here. I know guys really do struggle with reading Orderflow. I take it for granted sometimes because it's pretty automatic for me, but I sometimes have to sit there and figure out why is it that I can get it and then others can't so quickly. I guess that's why what I try and do each and every day in the trader room, I try and break it down in a way that I speak my mind, because I don't just speak my conscious mind and what my thoughts are about. I speak my unconscious mind. Whatever I can possibly think about at that point in time, what I'm seeing, I try to relay that information very quickly, okay, through my voice, okay? Now, what you've got to understand is my unconscious mind processes 42 million bits, okay? 42 million bits per second. My conscious mind can only process about 2 bits per second. Okay, so it's a massive difference. Okay, now there is actually, we talk about this in the NLP for Traders event. Okay, it's actually 72 billion bits per second your unconscious mind can actually process very quickly. Okay, your conscious mind can only process a small part of that. Okay, a small part of that. So we don't know exactly how many bits. I don't even know what bits and bots are. Okay, I don't really care. All I know is your unconscious mind can process a hell of a lot more than your conscious mind. Okay, if you think about it, each and every day. Okay, all of us guys, you know, we get up, we wake up. Okay, how do we wake up? Okay, we don't wake up consciously, we wake up unconsciously. How do we stand up? How do we move our arms? How does our heart beat? How do we breathe? Okay, do you need to focus on, if you had to focus consciously on everything that you do, making your heart beat, okay, making your thoughts work, okay, making your emotions work, making your body move, and you had to do all of that consciously, do you think you could even function as a human being? Okay, each and every single one of you, I'm quite sure you would all agree you could not. Okay, if you had to think about everything you do as a human being before you could do it, including how your body moves and how it stays alive, okay, you are unconsciously keeping yourself alive. Okay, now what you've got to understand today is what I'm going to show you is how to unconsciously keep yourself in the trading business and unconsciously make money each and every day without effort. Okay, now you don't have to try and stay alive each and every day. Your unconscious mind does that for you, right? You don't have to sit there and breathe purposely, consciously. Now, if your unconscious mind can be trusted to do that, why not trust it to do your trading for you? Now, everybody's always talking about systematic trading, okay, and mechanical systems. Now, for one thing, I can tell you for a fact, we've tried it ourselves. Your computer is never going to be as powerful as your unconscious mind if you know how to use it. Okay, everybody agree? If you don't agree, okay, you will soon make this your belief and begin to agree. Okay, so that's why I always say trading is an art. It's an unconscious art. It's not a conscious scientific, okay, methodology. It is a unconscious art, and you have to understand that when you're coming into the trading business and trading with Orderflow. Okay, you have to understand that, right, guys? Can I just have a quick yes? Just make sure one guy just understands. I want some feedback throughout this presentation, guys. When I get yeses, okay, I know I'm doing something right. If you're not with me, let me know. Okay, cool. Okay, so we all agree that we breathe and live unconsciously, right? So what you've got to understand is how can you take that power of being alive in your life into being alive in your trading? That's what we're talking about. Now, the agenda for today, understanding the L2ST edge, okay? Not just technically, psychologically. We're going to then talk about making the commitment, okay? I'm going to explain what commitment is. A lot of guys talk about commitment, you know, and just throwing this word around as if it's just nothing. You need to understand, you need to sometimes just break right down to the core of certain words that you use in your everyday language. One of the things we learn in NLP, which is neuro-linguistic programming, okay, it's basically like it's like a guide to how to use your mind, okay? Not only use your own mind, but also help others use their mind, okay? It's a guide, okay? And now what you've got to understand is that language has a massive effect on how you are as a person and how you be in everyday life. Now, words alone only account for 7% of who you are. The language that you use accounts for 38% of who you are. 55% of you and how you're being and your state of being is actually determined by your physiology, how you're holding yourself, how you're breathing, okay? How is your energy, okay? How are you standing? How are you sitting when you trade? That kind of stuff. Now, this webinar is not about psychology, but however, every webinar, whether it's technical, I'm going to be talking about Orderflow today, it is, whether you like it or not, it's always going to be about psychology, okay? Because you, at the end of the day, have to make things happen. And if it's you that has to make things happen, you have to understand that your mind and who you're being at that point in time is what's going to make things happen. Right, guys? So then we're going to move on to effortless unconscious trading. Talk a little bit more about what we're talking about right now. L2ST order flow patterns for trade execution. We're going to talk about that. Then we're going to talk about an outlook on risk and trade management. Okay, I'm going to give you a different outlook. I'm going to give you a metaphor, okay, to how to look at trade management. You guys are going to really like this. I really liked it. It's something that I've put together. It's very unique for today's presentation. It's something that I've not shared before, but it's a brilliant metaphor. One of the things we also learn in NLP is to teach with metaphors, okay, because people remember metaphors and they get confused with too much technical sort of explanations. Okay, so what I do is break down some things with metaphors to make it an anchor, in a way, to anchor that not only on a conscious level but an unconscious level. So one of the things you'll realize at L2ST, although even our teaching methods on a daily basis, you'll notice that I talk very quickly, and sometimes people say slow down. That's because they're trying to learn consciously. Now, what I say to you guys today, and I've done a meditation earlier for a reason, okay, is to help you learn unconsciously. Okay, so you have to tap into the power of the unconscious mind. Okay, just trust your unconscious mind. Please, just trust your unconscious mind. You trust your unconscious mind daily to stay alive. Just trust your unconscious mind to learn what I teach you each and every day, what Brian teaches you, okay, each and every day, and what we teach you in these presentations. That's all I ask. Okay, if you do that and you learn how to trust your unconscious mind, okay, before you know it, okay, you've made it in this business. One of the biggest things you can do is just trust yourself and your unconscious mind. Okay, more importantly than anything else. Okay, move on. We're going to then move to the L2ST order flow patterns for trade management and exits. Okay, we're going to look at the secret L2ST technique for unbeatable discipline and commitment. Right, ready to go? Okay, so first of all, we're going to talk about getting an edge. Okay, we talk about our edge all the time, L2ST edge. Okay, it's an edge I have, mine has an edge. We all have to have an edge over our competition. In the trading business, it's all about being better than your competition to make money. Okay, it's a reality. Okay, how do you get an edge in the trading game? Okay, it's quite simple. Okay, use better information, then understand it better than your competition. We use real-time order flow information as presented by the market data software in what we know as footprints. Okay, you guys have begun to experience that already. We also read the dome, okay, the depth of market, that is your trading. Some people call it the trading ladder. Some people call it the depth of market. Some people call it the order book. Okay, whatever you please. Now, I'm not going to go too much into the depth of market in the dome today. I talk about that on our 3-day webinar, which is next weekend. Okay, so I'm not going to go into that today. However, it's not absolutely essential. Well, I don't even use it as much as I used to. Okay, because market data and time sales is pretty much what you need, really, more importantly than anything else. Okay, and the other thing we use is time and sales. So we're going to focus today on footprint and time and sales. Now, we always talk about pre-trade supply and demand, which is basically your resting orders on the bid and the offer, which is the depth of market. Then we talk about post-trade supply and demand, which is your footprints and your time and sales. Right, now, technically, what does order flow give us? What does market data footprints give us? What does the time and sales give us? Okay, it gives us an edge by telling us when buying or selling in a directional move is being cut off. Okay, so we all know that directional moves that happen, okay, happen for a reason. Now, today, for example, the indices were selling off. You know, we was looking at buying below value, but then very quickly, through our art of adaptive trading, we realized that buyers were not responding. Something's up. The unexpected response has now manifested on our screens, okay, in the environment we call the markets. It has manifested itself into our reality, okay? Now, it's become our reality, so what we need to do is adapt. We needed to start looking for shorts straight away. We found a short, the market sold off almost over 100 ticks, okay? Well over 100 ticks by the end of the day. That market continued to sell off most of the day, right? Okay, the market's probably, I don't know what it's doing right now. It may have okay, and they have been cut off. When sellers have got too short and they have got cut off, that is what you need to look for. What most traders do is they focus too much on after the fact. What's happened after the fact? Lagging information. Now, we always need to look for what may happen next, because that's the way we get the edge. If you're ahead of your competition, you've always got the edge. Right? Everybody understand that? Quick yeses, please. Okay, somebody's lost me here. Georgie, do you have no audio there? Okay, Georgie has no audio. Brian, if you could just quickly send Georgie a message, please, if possible. No, Georgie can hear. Right, okay, cool. Let's keep going. Don't worry, Georgie, we're recording this, so you'll get the presentation afterwards if you've just missed a chunk there. I bet you just remember to put your speakers on, right? Okay. Anyway, let's keep cracking, guys. Don't want to get out of the flow now. Okay. When we also can see out of this information when new buying and selling interest is re-entering the market, which is absolutely key when we want to get into the trades. Okay. And not only when we can see it when it's coming, we can see it at which prices. And at the end of the day, price is the advertising mechanism. Okay. But volume at price, okay, and the amount of time the market spends at price, okay, is the regulator. Okay, that's what regulates that price. Okay, you have to understand that. Okay, if you just make sure you put that in your head. Okay, put it up on the, on your wallpaper if you have to. Okay, make a wall out of that phrase. Right. So the other thing is, how strong or aggressive is the buying or selling conviction at any time? Is it strong or is it weak? Is it buying or selling weak? And you cannot get that off price. You cannot get that off any indicator. If you can find an indicator, okay, or a particular bar chart that can tell me that information, how a strong or aggressive buying or selling is. Now, the only thing you can see is where price is. That's a fact. That's the only thing you can get, is where price is. You will never know price action alone whether it's attracting more selling or more buying. We can sometimes see bounces, okay, in a downtrend. We can actually see before even a lagging indicator can even pick up that the sellers are getting in, because that has to wait for the sellers to get in. That has to wait for people like us to get in before we can do anything. Right, guys? So you have to understand it's all about getting an edge, okay? And what we're trying to teach you guys here at L2ST is how to get that edge. We're teaching you our edge, okay? We're not just teaching you a methodology. We're not just teaching you buy and sell setups. We're teaching you how to get an edge over your competition day in, day out. And some guys, some people ask me, how profitable are you? What is your drawdown? What is your track record? All of that is bullshit, really, okay? Because at the end of the day, when you get to this level, when you really understand this and make this work for you, each and every day you should make money. If you don't make money one day using Orderflow, okay, and using some of the techniques I'm going to show you. Now, firstly, you might not be able to do that, okay? It might take you a few weeks, few days, okay, even if it takes you a few months, okay? But you should pick this up very quickly, okay? Especially once I'm going to break this down, the way I'm going to break it down. You should pick this up very quickly. You should make sure your vision should be to make money each and every day, no matter what, okay? And I'm going to show you one of the most powerful ways to bring your vision, okay, into manifestation and into reality, okay? The other thing that we get through technical order flow analysis is that we can see where stops are being triggered and when they are getting triggered as well. Okay, I'll often show you that, guys, that in the trader room, and I'll show you some examples of that later as well. Right, guys. So, psychologically, what is our edge? Okay, technically, that's our edge. Psychologically, what's our edge? Right. Now, this is some of the things I talked about earlier. The key is to gain mastery through unconscious competence. You guys always hear me talking about unconscious competence, right? Now, there's 4 stages of learning that all traders go through, and now all of you would have been through it yourself. Okay, firstly, most traders are unconsciously incompetent. So they don't know that they don't know. It's probably the worst place to be. These are the guys that maybe, the guys that always approach you, give me some tips, which market should I be buying? Now, I get this all the time. Guys that find out you're a trader, Give me some tips. Give me some tips. Which stock should I invest in? You know, you shouldn't invest in any stocks if you ask for tips. Basically, that's your first lesson, right? To gain unconscious competence, okay, what we need to do is learn to trust the power of the unconscious and subconscious mind. Now, the next phase after unconscious incompetence, okay, is what? Conscious incompetence. So you know that you don't know. Okay, this is where most people think, okay, wait a minute, trading has something else more to it. You need to get educated before you can make money in this. Now, most of you guys may be at that level right now. You've realized, wait a minute, I'm incompetent in my trading because all I do is buy and sell triggers created by a stochastic or an MACD. I have no idea or understanding of why I'm actually buying or selling those triggers. I have no understanding of who's buying, who's selling, and how strong the buying and selling is. Now, if you have that level of understanding, you fall right into that lower level, okay, of conscious incompetence. Now, the third stage of learning that a trader goes through is what? Conscious competence. Okay, conscious competence. Conscious competence means that you know what you need to do, you know what the methodology is, you know what your trading plan is, but you can only ever make money through conscious effort. You use your conscious mind. You have to think everything through. You see a setup and you have to, like, you know, compare to your trading plan. Okay, is this a setup? Is it not? I'm not quite sure. This is where the umming and ahhing comes into trading. Okay, all this umming and ahhing whether I should take a trade. This is where the hesitation comes from. This is where the anxiety comes from. This is where the fear comes from. Most traders, majority of the 95% that lose, are still in that conscious competence level. They're okay, but they really sort of maybe fluctuate around break out where your trading is unconscious. You know, it's like going to work each and every day. You know you're going to get paid no matter what. Okay, you just got to turn up. That's how you got to approach trading. How many of you guys approach trading in that way, or how many of you guys don't approach trading in that way? If you don't approach trading that way right now, just give me a no. Okay. Now, if you approach trading each and every day and say, I'm going to make money, I already have my vision in place. Now, all I've got to do is trade from the moment that I'm in right now up to where I want to be and bring that into manifestation. Okay. So if you're not there at the moment, this is your problem. Okay. You're trusting your conscious mind only. You haven't tapped into the power of the unconscious mind. Okay. No, so I'm not going to only teach you the technical setups. You have to learn how to unconsciously trade those setups. You have to trust the unconscious mind. Okay. It's the biggest thing to take away from today. Trusting your unconscious mind. Now, I use this daily in my life, not only in trading. I trust my unconscious mind for everything, even education, everything, all of the business, the L2ST, everything. I mean, for example, you know, I do these seminars, these webinars, whatever. I already know how many people I'm going to get before I get them. Okay, I already know my vision of what I'm expecting to achieve from this webinar and this seminar before it happens. It's already happened in my life. Okay, all I'm doing is playing out the game, and that's exactly what you got to do when you tap into the trading game. Okay, you just got to, you know exactly where you're going to be at the end of the day. All you're going to do is play the game in between where you are right now to that vision, okay, that experience, that result of where you want to be. It's all it is, a game, guys. Okay, life is a game, trading is a game. And when you start believing that, okay, that's when you just do a U-turn in life in general. Yes, David, you're doing battle with the Prince of Darkness. Now, I actually have I always have this talk with guys, okay, that always, especially the guys that sort of start to work on self-development, start to go through meditation. You'll always have these what I call shadows, okay. You'll always have these inner demons, okay, inner demons, or the negative self-talk always show up. Okay, it's always going to be there. Now, what you need to do is each and every day you need to process them. Okay, that's why I have to do this each and every day for 1 or 2 hours a day. Do an hour in the morning, 1 hour after trading. Each and every day, it's a ritual for me. If I don't do it, I feel it the next day. I'm pretty much guaranteed. Okay, I can say if I don't do it, okay, I know why I've lost money the next day. Okay, so if you don't do some of these techniques and methods that I teach you, that is why you're losing money. Okay, because you haven't trusted your unconscious mind. Okay, your unconscious mind, if you don't trust it, it's going to work against you. Okay, if you don't make it work for you, it will always work against you. Okay, now I'll talk about some of this stuff in the NLP for Traders event as well. Okay. Now, I was going to say something to you guys anyway, but I'll send an email about that later, okay? But I'm going to do another event next month, okay, which is going to cover this a little bit more detail on the psychology. Now, I am still talking about psychology. I know we all want to get into the technical stuff, and we've only got about 2.5 hours left to go, so I want to get cracking now. Okay, so anyway, we have to learn to tap into that unconscious competence and learn how to trust it. Okay, some of you guys might think this is all mumbo jumbo, okay? You might think, what is all this stuff about the mind? And, you know, I don't understand that. Okay, why do I have to do that? Is anybody here that thinks that right now? Okay, just give me an idea. Does anybody not quite understand why they have to master themselves and their unconscious mind and their emotions before they actually understand execution and order flow? If there is anyone, just let me know, because I'll have to explain it to you. Okay, if you understand, okay, majority of you should understand. Okay, so if you don't understand, then let me know and I'll explain it to you. Maybe I'll have to have a chat with you, but you should begin to know that right now. Okay. Good. Okay, so let's have a look. Okay, so we've got to tap into the power, okay, by learning to let go. Firstly, that's why one of the things I started with this morning, is a meditation. Okay, we had to learn to let go of the thoughts and emotions that may be in place. Now, your thoughts and emotions, if anything's going to hold you back, it's always your thoughts and emotions. It's never your methodology. It's not going to be what I'm teaching you because I know it works. Brian knows it works. It's never going to be that. If anything's going to hold you back, it's you. Okay, so even with what we're going to teach you today, it's always going to be your thoughts and emotions. This is what you've got to work on. Okay, now these thoughts and emotions are going to cloud the screen of your unconscious mind. Okay, so what you need to do is still that mind. Okay, some people call it silencing the mind. Okay, it's like you need to be able to switch it off. Okay, you need to be able to switch off the mind. The mind is actually the problem. The conscious mind. Okay, that is actually the problem. Okay, so you need to understand how to switch that off. It's like sometimes you guys do it with other people. Okay, if somebody's nagging you, what do? You switch your mind off. You pretend you can't hear them. Okay, you shut off. Okay, now one of the things you've got to be careful with, is you don't want to block it. Okay, now if you block what's happening on the unconscious mind, okay, it will actually come back and hit you even harder. So if you block fear, you block anxiety, so you cannot do that. So you have to learn how to process it. If you're not sure how to do it, okay, I'll show you some techniques, okay, in the next presentation we do next month. Okay, but for now, what you got to understand is you have to, what I did earlier on today, for example, in the meditation, was helped you observe. Okay, so you didn't identify with the thoughts, you didn't identify with the feelings or emotions. All you did is observe. You say, hello, okay, you're there, okay, goodbye, okay, I know you're there, thank you. That's it. All you're saying is hello, okay, to your thoughts, your emotions. That's all you're saying. You're not saying, I don't want you there, get away, get out of my life. You're not doing that, because if you do that, they're going to come back and get you. Okay, so never fight your emotions, because if you do that, you're going to build up a tsunami of emotions. It's going to come back and hit you in one go and knock you over. Okay, so you never do that with your emotions. Never repress emotions. Okay, and that's what most traders do. Consciously, they repress our fears, their anxiety. Let's just push it aside for today. Okay, maybe we'll get rid of it. Okay, that will just make things worse. So never do that. You have to process this stuff. Okay, you have to process these inner shadows. You have to process these inner demons, you call them. Okay, or Prince of Darkness, as David put it there. Okay, so make sure you clean the mind. Okay, and you also have to know how to do that. In order for us to get into the power of what we need to get into in order to trade order flow successfully, you have to do it. Okay, you haven't got a choice. You haven't got a choice. I can teach you how to trade order flow, but most of you are going to be so slow because you're going to use the power of the conscious mind. Your conscious mind is not going to be quick enough in order to trade with order flow. Let's put it that way. Okay, your conscious mind is too slow. Okay, let's put it that way. It's like a go-kart trying to keep up with a Ferrari. Okay, it's not going to happen. So give up on that right away. Okay, make sure you understand this and take that in. Right, guys, there's no sound. Okay, I keep getting guys saying there's no sound. Right, guys, just bear with me a sec. Frank, can you hear me now? It's okay. Right, okay, there's no sound and then there is sound, so I'm a little bit. Okay, is anybody cutting out with sound? Okay, because it must be your end. Anything I can think of. Okay, no, okay, cool. We'll just keep going. If we've got any problems with sound, well, we can. Sort that out later. No cutouts, good stuff. Okay, Frank, there's no problems with sound, mate. Okay, sorry about that. I know you can hear me now. Okay, so right, guys. Okay, now let's just get the mind's condition for ready for what we need to do. Okay, we need to get the mindset condition ready to understand what we're going to do. Okay. Now I want to talk a little bit about trader commitment. Okay. Now, actually, what I'm going to go back and do is I'm just going to take this back to the next previous slide. I want you guys to give me some answers of what you feel commitment is. What is commitment all about? Okay, I'm just going to switch my mic off for a second while I get some answers. Okay, we've got some good answers. Okay, so Kelly Kilpatrick, doing what it takes to get the job done. I like that one. I mean, all of you guys are probably right. Okay, there's no real one answer. Okay, but what I'm going to give you is I'm going to express my beliefs about what commitment is. Okay, so I had to ask myself, you know, what do I do when I trade? Okay, and one of the things that I did is sort of break this down in terms of, you know, I commit myself fully to my each and every trade, and you know, to each and every day. That's what I do. Okay, so that's why I thought, okay, commitment is the main thing. Okay, so let's work with that first. Okay, first of all, we always start with commitment. Okay, so Brian Johnson, good stuff, intention. Absolutely, that is actually probably in one word the absolute correct answer. Okay, it's all about putting your intention on something. I like that, Brian Johnson, good stuff. Never quit. Okay, utter devotion to succeeding. All of you guys are right here so far. Every single one of these. Okay, utter devotion to succeeding is just like intention, right? Doing what it takes to get the job done falls under intention. Okay, dedication, actioning your plan at all times, seeing something through. That's a nice one, Joe. I like that. Believe that you can accomplish something. Yep. Doing what you say you're going to do. Absolutely. Belief that you can accomplish something. One of the most important things is actually belief. So I like that one, David, because without the belief that you cannot accomplish it, okay, the commitment can even be a weak thing. That's why one of the first NLP for Traders events I did back in July last year, okay, talks all about beliefs. Okay, but the core of your being is always going to be determined by your beliefs. Doing what you're saying you're going to do. Yep, okay, I've already got that one. Making a conscious decision to achieve a goal and then take specific regular steps towards reaching that goal. I like that one. Sticking to the plan. Total dedication to your vision. I really like that one, Jim McLaughlin. Okay, I really like that one. Okay, because that's exactly what it's all about. It's all about vision. Okay, now vision and intention, very similar things. So anyway, let's move on. Okay, the rest of you guys, thanks for giving me some responses there. Okay, we're all are good. Okay, every single one of you are right. Okay, they're all good. I just wanted to get, you know, your take on it. Okay, what do you believe? Now, each and every single one of you are right. Okay, now commitment is actually about that. Okay, now what I've realized is in trading, what I had to do is before I can focus on any trade, okay, I first had to make a commitment, okay, to that trade. Now, not only the trading, it's even when you get into the trading business, you have to first make a commitment to it. Anything you're going to do, anything you're actually going to do, and you plan to do it well, you commit to, okay? That's for me what it's all about, right? Now, for me, this is how I put it. Okay, so all you guys are absolutely right. Okay, intention, you know, seeing something through, you know, put it 100% effort into your work of art. Okay, burning the ships, no turning back, no matter what. You know, all of this is absolutely right. Commitment is a willingness to risk yourself by promising a result without the guarantee of the outcome. Now, this is the thing that the most important part of this is that it's the willingness to risk yourself. Now, this is my own thought on commitment. Do you guys all agree? It's the willingness to risk yourself by promising a result without the guarantee of the outcome. So you'll commit yourself to the trade, you'll commit yourself to the trading business, but however, none of you are going to ever have a guarantee of the outcome. Okay, but what you have done is promised yourself a result. Now that's a powerful thing, okay, especially on the unconscious level. Straight away, you've made a declaration. What a commitment is, it's like a declaration, okay, to yourself that this is what I want to achieve. It's like a vision and intention, okay, as some of you guys put, okay. But however, that vision and intention it's not a guarantee, okay, of the outcome. So we all know we're involved in the trading business. It's an uncertain place, okay, so it's full of uncertainty. There's no guarantees in the trading business. There's no guarantees in life, you know. Each and every day we're walking down the street, you know, it's a risk. You know, each and every day we're involved in trading, it's a risk. Okay, so we're risking ourselves each and every day just by being involved. You know, being a trader and making that declaration and making that commitment yourself, you're risking yourself. Okay, you're promising yourself a result without the guarantee of the outcome. Now, we always talk about setting daily goals. Okay, so each and every day you set yourself a goal. Now, that is your result. Okay, you need to set yourself that result. Okay, each and every single one of us need to set ourselves that result, okay, in the subconscious mind, the unconscious mind. Okay, we need to have a vision of where we want to be. That is the result. However, we always know that it's not a guarantee. So there is a level of uncertainty. However, if we have that vision, we know we've got a much better chance of getting there. Okay, so in effect, promising to achieve something sets in the motion of a way of being in the world where you can act in terms of your vision, thereby creating the possibility of making things happen. Does that make sense to everyone? Okay, so you're promising yourself to achieve something, okay, and just by promising yourself that to achieve something through the commitment, okay, you've set in motion already, okay, a way of being in the world, okay, especially on an unconscious level, okay, or where you can act in terms of your vision, thereby creating the possibility of making things happen. Okay, just listen to the language that I'm using here as well, and how this language is being broken down. Okay, commitment taps the enormous energy and creates extraordinary possibilities for realizing your vision by putting you at risk without any certainty. So what it does, okay, that commitment, okay, what it is all about energy. Now, I always talk about everything is energy, okay? Everything you do, okay? Everything you do each and every day, okay, it's going to involve energy, okay? Everything you see around you, everything you see within you is all energy. Now, I do energy work with individuals when I work on the mind level, when I get to a very deep level, because I believe there's something that you need to work on, which is the mind, okay? And then we also have something which we call the pain body. Okay, now that's also your energy, your aura, everything that's within you and around you. Okay, basically on a spiritual level, it becomes very powerful. But you know, spirit for me is energy as well. So it's all on an energy level. Everything manifests on an energy level. Okay, in terms of trading as well. So what we've got to understand is that when we make a commitment, okay, that's energy we put out. Okay, that's created this vision. Okay, this vision may be just, you know, on the subconscious, and it may not be feel real in our three-dimensional world. However, it's real in the subconscious mind. Remember, your subconscious mind doesn't know what's real. Okay, it doesn't understand the difference between, you know, what's really being experienced in the three-dimensional world in physicality. Okay, as long as you put the vision there, it thinks it's real. It doesn't know the difference. Okay, so what we do when we put that commitment there, that vision, okay, to a trade, okay, we already have put ourselves at risk without any certainty. Okay, so this is just important to understand, because it's all about the psychology of risk and understanding that we have to embrace uncertainty, okay, with each and every trade. So commitment is also beyond the decision when you ask, can I do it? Okay, by making that commitment, what you've done, okay, on the unconscious level is you've declared, I will do it. You're not saying to yourself, can I do it? Okay, the only thing that's going to take you away from the I will do it, okay, and the commitment is your conscious mind saying that, you know, maybe, oh, can I? Maybe I can't. Okay, it's going to be your inner chatter. I call it the monkey mind. Okay, the inner voice that takes you away from it. Okay, this is where most people have the problems. Okay, they cannot silence the mind. Okay, they cannot shut off that part of the mind. Okay, that would just takes them away from this. Right, guys? Now, in the realm of commitment, you have to take a stand and do it simply because you have made the decision to do it. Okay, so once you're in that realm of commitment and you've made that declaration, you have to stand. Okay, you have to do it. Okay, especially on an unconscious level. As long as you don't take yourself away from it and you don't take yourself away from the vision, okay, your unconscious mind will help you achieve it anyway. Okay, so here you stand on the foundation of creative vision of the future and not in your past history or your self concepts. Okay, your self identified mind, okay, identifying with thoughts and emotions related to past experiences. Here you step away from that. You trade from the now in the present moment. You live in the now and you action immediately before you. Okay, you live in the now, right now, what's happening in the present moment. This is what I always talk about. Don't try and predict what's going to happen next. We expect possible behaviors in the market. We expect market participants to do particular things at particular levels because that's our plan. We've got to have an idea of when we've got to start to create this vision and when we've got to start to look at order flow and start to see, visualize what may actually happen. So remember, when you come into order flow, you're not looking for it on your charts firstly. You're looking firstly for it on the screen of your subconscious mind. Does that make sense? You've got to remember that you need to be ahead of the game. You've got to be ahead of your competition. You need to see this on the screen of the unconscious mind. You've got to create the vision firstly of what you need to see even before you react. And that way your automatic response is always there. Okay, that's how you tap into unconscious competence. You've got to have the vision first. Okay, and I'll have a metaphor for you later, okay, to help you do that. Okay? You have to say that I know it will happen. Now I have to be patient. I know what I have to do to make it happen. So you already know that it will happen when you're looking for the trade. Okay, you know what you got to look for. You've already understood what you got to look for because you have that vision. Okay, just think of the screen of your subconscious mind as, you know, like a screen, and it's like a projector. Okay, you're projecting your vision onto this screen, okay, of the subconscious mind, and you hold it there until it becomes a reality, until you see it on your screens of your charts, okay, on your monitors. Now, one of the most important things we've got to do is tap into the power of the unconscious mind, okay, to get into the power of unconscious trading. The unconscious dimension of you flows effortlessly and without friction. Remember, your unconscious mind is always in control, whether you like it or not. Okay, it's always automatically there. As long as you're alive, okay, your unconscious mind is there. So any of you guys don't agree, okay, if there is anybody that doesn't agree, okay, or wants to disagree right now, you can tell me, okay, but most of us live unconsciously, okay. Mostly, what we need to do is, like, through practices such as meditation and some of the NLP techniques that I use, okay, we raise our awareness level so we become more conscious of the unconscious. And that is when you really start to make a shift in your trading career. Now, funnily enough, I know I've seen this myself, because most traders, I mean, just from looking, and I really have to think about this sometimes, most of the questions that I get is never about psychology, okay? It's never about the unconscious mind and how to tap in the power of the unconscious mind. Now, even the products, okay, we have products on our website. We have, you know, Art of Adaptive Trading, Trade Execution, and Trade Management. Anytime we do a webinar which is based upon psychology and the unconscious mind, or the NLP for Traders event, we always get more attention, okay? And I found this quite interesting whenever we're going to discuss something related to the technical aspects, you know, such as market profile, order flow. Whenever it comes to the mind, okay, and the mindset, okay, you know, nobody's really interested. Nobody wants to, you know, we probably, you know, for example, the product, we have NLP for Traders. You know, the odd few, you know, you say, you know, 5% of traders lose. 5% of traders only make it. 95% of traders lose. Probably about 5%, okay, of the guys that have bought any of our products actually invest in the mindset. It's quite interesting, I found, okay, because most guys want to stay away from it. They try to ignore it, pretend it's not there. I mean, I've seen it myself, okay. So many traders pretend it's not there. I talk to so many traders. Fear, I never had it. You know, never me. You know, I would never experience fear, anxiety, never. You know, never a problem with me. You know, and this is the ego. Okay, this is the problem with the ego. It will pretend that you don't have these issues. Now, what you need to do is actually just, you know, you need to sometimes be a little bit more humble. Just accept the fact. Look, okay, there's a reason why I haven't succeeded right now. I'm not getting the results that I should be getting. And the fact of the matter is, it's because of the mindset. Okay, it's not because of what you're doing technically, okay, on the charts or whatever. Okay, firstly, it always starts with the mind and how you're being. Doesn't matter. You can have the best methodology, okay, in the world. Okay, so what you got to do, okay, you got to understand, okay, you got to tap into this power of the unconscious mind, okay. It arises from when you step into the realm of uncertainty, okay. You have to step into that realm of uncertainty. Now, in trading, one of the things I actually love and what excites me about the trading business is the risk element, okay. You cannot afford to be risk averse in this business. You have to be able to actually embrace the uncertainty, okay, behind what you know, okay, and commit to the fullest expression of your hidden potential by acknowledging your own vulnerability and being willing to surrender to the unknown so that the extraordinary may happen. Okay, does that make sense? Let me just repeat that again. It arises when you can step into the realm of uncertainty behind what you already know and commit to the fullest expression of your hidden potential by acknowledging your own vulnerability and being willing to surrender to the unknown. This is where the uncertainty is. It's like you need to move into the unknown. Okay. In self-growth, it's all about moving into the unknown. It's, you know, a lot of people stay in the comfort zone and stay where they are purely because they don't step into the unknown. Okay. That becomes the problem. Okay. So you have to understand that you have to step into the unknown. Okay. It's when you step into uncertainty and embrace uncertainty and embrace the unknown that extraordinary things happen. Okay. Such as things like being up each and every day, okay, doing things to the norm, no drawdowns. Each and every day you make money in the trading business. Now, the only way I could ever achieve this is by conditioning my mind to believe I could do it. Firstly, I couldn't just do it by just conscious effort saying I want to do this. You know, I'm never going to have a drawdown. That's never going to work in a million years. Okay, you have to work on the unconscious mind. Anyway, let's now move on to the more technical stuff, which most of you guys are probably more interested in. Okay, now I've got a question there. Are your students more successful using techniques that is success rate more than 5%? Yeah, absolutely. I mean, the guys that we work with always, the thing is, Jim, you'll realize that whenever we work with anybody, you'll always have an experience of working on the unconscious level, working with techniques from NLP meditation, because I just would not teach you how to trade without it. Okay, and we actually, the good thing is that we actually attract like-minded individuals that actually understand the importance of that. Now, even if you check our website, it actually says, look, you know, this is the kind of people we look to deal with. Okay, the guys that actually appreciate that their mindset is a massive importance to their success in this business. Yep. So how do you make the transition? Are these products there? Yeah, of course. I mean, the products are obviously on a daily basis, but I'm going to be talking about this on the 3-day event as well. I've got some techniques put together, okay? But also, as I said, on every 2 months, we're going to do a psychology event, okay? So all you need to do is become a room member, basically. And you are all room members anyway. So all you got to do is stick with the process, okay? Stick with the room, okay? Each and every month. You know, each and every week, firstly, I'm going to do a meditation NLP technique, okay? So you don't need to look for them. I've got them for you, okay? You don't even have to find them. I've been through the processes that work and don't work. So, you know, that's all you need to do. All you need to do is turn up, okay, and stay with L2ST. That's all I can say, basically. You don't need to look for anything, okay? The techniques are there, okay, Judy? Good stuff. Okay, let's move on. So, look, okay, guys, let's just keep going. Okay, the L2ST order flow patterns for execution. Understand that trading with order flow is an art form. Okay, it's not an exact science, so that's why we, you know, sometimes, you know, you can't really put the trade execution setups in a plan as such, unless your plan is going to be maybe 500 pages long. Okay, now, I would love to put that together someday, and that is my goal. Okay, put a trading plan for order flow together. Now, what you guys will notice that, you know, the trading plan that I send you guys to trading with members now is, you know, a few pages long, you know, 7 or 8 pages long. I can't remember how long it is now. But, you know, the setup is very simple, okay, for a buy setup, a sell setup. Okay, we have, you know, 6 main setups. Okay, we have a range extension sell setup, a normal value at a high sell setup, setting off the value at a high of the first hand deviation high. We have a buy setup, which is buying off the first hand deviation low or below value. okay, generally going into the range extension trade 1272 1618 extensions, and then we have the buy and sell setups which occur when the market is moving away from value, okay, which is what we saw today on the indices, where we were just selling the bounces to the 34 exponential moving average, or buying the dips to the 34 exponential moving average, or the first standard deviation high or first standard deviation low. So we basically look for that. That is our setup. The setups are very simple. Okay, they're not rocket science. They're not difficult. Now, what gives us a massive edge is qualifying those trades through step 4 of our trading process, which is looking at the order flow for execution and also managing the trade very well in order to make sure that we eliminate risks as quickly as possible. Okay, so what you've got to understand that trading is an art form. I want to give you some ideas here. Now, what you'll understand is that not every single, you may have exactly the same setup, okay? You know, maybe, for example, a divergence above value right at the 1272 extension for short back into value. However, that's a setup in terms of price action, okay? A setup in terms of volume breakdown, technical indicator analysis, okay? It's a setup in terms of looking at auction theory and where prices reference the value. However, the setup as it occurs in terms of when you actually pull the trigger, when you actually execute the trade, which is all about timing, because, you know, you have the setup, it doesn't mean you actually just pull the trigger, because that way, you know, your timing might be off. You might have to wait for that market to move another 30 ticks against you. So, you know, it's very difficult to define where your stop should be, you know, where you should be taking profits if that's what you're doing. Okay, so and that's why the majority of traders actually find that in day trading, their stops get hit very often. Now, swing trading is okay. You don't need to go into order flow so much, okay? But for day trading, because you're looking from a longer time frame perspective. However, as day traders, okay, what you've got to understand is that without order flow and pattern recognition and good trade execution, trade management, okay, without it, okay, there's too much competition that is working against you. The professionals in a trading environment, okay, from a day trading perspective and a scalping perspective, okay, your competition that's working against you is a lot greater than those that are against swing traders. Okay, now most of us, we want to be day traders. We want to make money each and every day, right? So what you've got to understand is the scalpers really, you know, that are putting in big size against you and trying to play these games against your entries, okay, are not going to really have much of an effect if you're using wide stops, looking for big moves, you know, holding for a few days or a few weeks. Okay, so you don't need to be too sure, you know, too concerned about that. But, you know, looking for an entry as a day trader, okay, the scalpers, professionals that are looking at order flow can see where your trades are. They're looking to take your money, so they will eat you up, okay, if you don't understand order flow. Okay, that's all I can say. As day traders and scalpers, okay, if you want to be in and out of the market during the day, as like I am, okay, whether you're day trading, holding, you know, looking for intraday swings, holding for, you know, a few hours or, you know, a few minutes, it doesn't matter. Okay, you still need to execute a trade some point during the day, and, you know, it makes sense to execute that trade with the least amount of risk and the highest probability of it moving in your favor, right? Straight away. So does everybody agree with that? Okay, most of you guys have probably been down the process where you've got brilliant setups. You can see the setups are brilliant. They work day in, day out, but, you know, you just cannot execute that strategy, that methodology, and in a way that you can use the kind of stops that you want to use, looking for the kind of risk management that you're looking to use. Okay, and the reason is because, you know, guys are playing games against you. They're looking for you guys in the day type. Okay, in the day. Now, I'm not getting at any of you guys, but majority of you guys that don't understand it, that's what's happening. Now, I realize that, you know, you can get away with it. You just have to use wider stops and go for bigger profits. Now, there's nothing wrong with that. It's just that you just got to take a lot bigger loss than you really need to, okay, in this game. Now, there's better ways to do it, okay? So what you need to understand is that patterns will not always appear exactly, okay, the same, okay? However, they will have similarities. And that is what you're looking for, okay? Similar behaviors in order flow that lead to prior reversals and good trading opportunities, okay? Prior reversal setups, okay? That should be. Now, focus on the high volume node, okay? That's the main thing we want to focus on. Now, you guys always see this yellow little block around some of my prices, and I'm always referencing that in the trading room. So now this is where you're gonna understand why it's so important. Now, focusing on the high volume node, okay, now this is basically like your fair value price, okay, or the point of control, if you guys know anything about auction theory, okay, and market profile. Think of it as like your point of control for that footprint, okay, for that bar. Now, shorter term buyers and sellers are going to be trading in reference to that fair value price. Now, if they're lifting the offers above it, they're basically trying to take the price away from it. Now, if they're hitting the bids below it, they're trying to take the prices away from it. So think of it as sort of initiating activity above and below value. Okay, think of it that way, the high volume node. But now we know it's only one price, but in terms of execution, that's how we've got to look at it. Does that make sense, guys? Right. And you've got to look at where it is trading as well. Where is the high volume node? Is it at the higher of the bar? Is it at the lower of the bar? Now, that's going to change as the bar unfolds. But what you'll find is that it will generally be at a particular level. When we're looking for sellers, okay, and when we get the kind of footprint setup we're looking for, when we're looking at short, the high volume node generally is just very close to the high of that footprint. Okay. Now, what we need to do is focus on where buyers and sellers are doing business within that footprint as it unfolds after the high volume node has been highlighted. Okay. So generally, what we're looking at, okay, for sell setups, okay, we're looking for a top or for buying to be cut off. Okay, remember directional moves, okay, need to be cut off before the next move happens, right? So we need to see that buyers have got cut off, okay, and then we need to see the high volume node close to the high, okay? Now, I say on most markets, 2 to 3 ticks off the high. Now, on the S&P, it's ideally needs to be, depending on the range chart you're using. Now, I use a 1 range or 1.25 range chart. I'll show you some examples in the S&P. Now, ideally, it needs to be on the high or 2 ticks off the high, okay, maximum. Now, on other markets like crude oil, gold, Dow, S&P, generally the markets which we use a 7-tick range chart, okay, and that needs to be maximum of 2 to 3 ticks off the high. Now, the higher the high volume node, the better the chance of sellers hitting the bids below it. Because what we're trying to see is that the concentration of volume has got trapped at the highs, and then sellers are getting involved and hitting the bids below it, okay, with conviction. Okay, now to buy, what we need to look for is the opposite to that. We're going to look for a bottom, okay, or for selling to be cut off. Now, we might be able to pick this up in advance by looking at the depth of market, maybe some resting bids that are quite heavy that the sellers can't get through. You can also use the bid-ask tool. Now, I'll talk about this on the 3-day event. Most of you guys here in the trading room are actually attending the 3-day event, so you'll see that. But I haven't really got time to go into the depth of market today. But for trading room members, maybe we'll cover that in April or something. Okay, so what we need to do, we need to wait for the sellers to get cut off in this place, okay? And now we want to see the high volume close to the lows of this footprint. Now, what you'll find is sometimes the footprint will be unfolding, okay? Now, I'm going to try and make sure we get enough time to do a replay. We've still got a couple of hours for this presentation, so we've got enough time. Okay, so we'll do a market replay for crude oil, okay? And then we're going to have a look at some of the trades that happened unfolded today. And I'll show you what we should have been looking for and why in slower motion. Does that sound good, guys? Good. Okay, so what we need to then do is when the buyers are actually getting cut off and the high volume node is like 2 to 3 ticks off the low, okay, so the sellers are getting cut off and the high volume node is 2 to 3 ticks off the lows, where they're going to look at the footprint for buyers beginning to lift the offers just above. So think of the high volume node. Now it's a yellow bar, okay, on some of my charts, or a yellow sort of rectangle. I'll show you what it looks like if you guys are new to the trading room. But most of you guys know what the high volume node looks like. I've made it very visual so you guys can see it clearly where it is. Okay, so where is the highest concentration of volume? Is it at the top of the footprint or at the bottom of the footprint? Okay, now if it's at the bottom of the footprint, you want to see some buyers lifting the offers above it. So in a way, it's like minor support and resistance. So you might have, for example, resistance, maybe a 1272 extension for a short above value. Now that's your longer time frame setup. However, for you to execute with the best entry, okay, with the best kind of timing you can possibly look for. Now, what you want to see is where the shorter time frame scalpers are using resistance from a high volume node and beginning to hit the shorts, okay, beginning to put in the shorts. Now, for the long, you'll be looking at maybe, for example, below value, so to see a divergence. You'll wait for the sellers to get cut off and the high volume node to get trapped right at the lows, 1 or 2 or 3 ticks off the lows. Okay, then you see the buyers are actually, you think of it as a scalpers. They're starting to buy or nibble up on that supply just below value. Okay, and that's what you're looking for. What do I mean by cut off? Okay, what do I mean by cut off? Basically, Sean, just let me know if you don't get this. Okay, if you think about the market when it moves up, okay, why does it stop moving up? Okay, why does it stop moving up? Okay, it's because there's not enough buyers to continue to lift the offers. Okay, that means basically what's happened is there was resting orders, okay, on the offer. Okay, so whenever the market makes a high, you'll notice that the buyers will be lifting the offer. There's hardly no volume on the bid. Okay, so the buyers will be lifting the offers, but however, what's happening is because you've got the resting offers also there on the current ask or offer price. You can see that on your dome. The market's only ever going to be trading the current bid or ask, right, or the current bid or offer. Now, when the buyers are lifting the offer, okay, so maybe the last trade is on the offer. Now, the buyers are lifting the offers, okay. However, maybe, for example, let's have a look. You've got 2,000 sitting there on the offer. Now, only 100 people or 100 contracts were lifted out of those 2,000. Now, there's still 1,800 offers still there. So now, if a lot of buyers don't come in and take all those 1,800 contracts, what's happened is that buying got cut off. Okay, because what it is, it's all about supply and demand. If there's adequate supply, okay, available in your current offer to cut off the current buying that's taken place on the offer, okay, that means that buying has got cut off. Okay, so any directional move you see, okay, will have that in place. Anytime we see it, the market makes a low or high, that's why it does it. Okay, so it makes sense. So no more buyers, basically. No more buyers lifting the offer. That's all, basically. Absolutely right. So easier way to put it, actually, Sean. Yeah. I should let you take over. It's probably an easier way to put it. I've got to you advanced. Right. Okay. Yeah. Basically, no more sellers hitting the bid, or no more buyers willing to lift the offers. Basically, that's why the market gets cut off. Now, how many ticks do you suggest for the DAX? Cam above or below support resistance? 2 to 3 ticks, actually. It's basically exactly what I'm going to show you on crude oil. If you use exactly the same setups and the same concept behind the DAX. Now, what it is, every market pretty much you'll find is very much the same. Crude oil, gold, the setup's the same. The DAX, the Dow, the Russell. Now, the Nasdaq, the S&P and the Euro stocks are probably the most similar markets because they're very liquid and they trade a lot of volume. So we use slightly smaller volume charts, but the setups are exactly the same. So I'll show you the difference anyway. Okay, so what we've got to do is when you have either of the above conditions, okay, these are basically our footprint setups. I mean, now we've got to show you how to look for these visually. We've got to look for time. We've got to look for a time to pull the trigger, okay, by watching the timer cells, okay, for timing the trade. Now I'll show you some examples of this when I do the market replay, okay, and playback. So what I'm going to do is move to some examples. Okay, in a second, I'm going to go through the time and sales here. Okay, so this is one of the presentations I'll go through when I do coaching on the 3-day webinar as well. But guys, what we're going to do is a quick break now. Okay, 5-minute break. You guys, if you need to go to the loo or whatever you need to do. Okay, all good so far, guys? Okay, we're going to have a break, and then we've probably got about we should finish within the next 2 hours. Yeah, you'll get copies of the presentation, guys. Okay. Every presentation we do, it's been fully recorded. You guys will get the presentation over this weekend. Okay, guys, I'm going to have a little break, and then I'll see you guys in about 5 minutes. Brian, if you could just maybe pause the recording, and then take over in a few minutes. For buying to be cut off, the high volume node needs to be close to the high of the footprint, 2 to 3 ticks off the high, ideally. Basically, the higher, the better, really. Okay, so that way we can lean on the resistance closer to the high. That way we can, we can be very sure that we can actually use a very, very tight stop as well. We don't really want to use tight stops because we don't want to get out of the market by using a stop. Stops, one of the things we always teach, guys. You guys that are attending the 3-day event, we'll teach you, okay, in the trading room as well, that although we always put stops in, guys, it should be not the reason why you get out of a trade. Okay, if you're wrong, you should be able to see that you're wrong in a trade before your stop gets hit. Okay, now I'm going to show you some ways to do that as well today. Right, first of all, I'm just going to cover some simple stuff about time and sales. Now, time and sales is very, very simple. It's not rocket science. None of this is really, once you get used to it. It only is, it's always, if you don't know, you don't know. You're unconsciously incompetent at the moment. But, when you don't know. That's why you guys are here. You're getting yourself educated, which is, a step closer to unconscious competence. Okay, next thing is once you learn this stuff, you're going to have to go through conscious competence. You're going to have to start applying the theory. Okay, and then you're going to move into unconscious competence. Now, what I want you guys to do is, move from conscious competence to unconscious competence very quickly. Okay, and that's the idea. So I'm going to give you a technique how to do that very quickly. Okay, later on today, you guys are going to be blown away by that. Something that I do each and every day, and I wasn't even aware consciously that I do it until I asked myself the question: what do I do to take the trades automatically? It was almost like I had a sort of a trigger for it, an anchor, and I'll explain what that was. Okay, I didn't find that out until I asked the question and until I put this presentation together. Sometimes you're not aware of what happens on the unconscious level. So what I do is sometimes ask myself the question, meditate, watch my thoughts whilst I'm meditating, and then I get the answer of what happens on the unconscious mind. It's basically like you become the watcher. You play back the unconscious mind at the end of the day. That's what I do. Okay, at the end of the day, I'll ask myself, why did I do what I did? Now, the answers are there because you did it, right? Now, the only problem is sometimes you're not aware. Sometimes even through some of the things you do in life, so you get angry without quite knowing why you got angry. You get frustrated because you don't quite know why you did it. Okay, now everybody has this. I get angry, I get frustrated. All this stuff. It's just we're human beings, right? You can't get away from it completely. The volume is popping in and out. Anybody got problems with the volume? Judy, is that okay now? Fine here. No, the volume is okay. Audio is great. Judy, the volume is good. Can you just confirm, please? You can hear me, but it goes in and out. Right, okay. It seems to be good on everybody else's side, so it's not my end here, guys. Sorry, Judy, it's not my end here. It might be your side there. I'm not quite sure why that's happening, but we'll just keep moving on. But as long as you can hear me, that's the main thing. You'll get the recording anyway. Clear as a whistle. That's one way to put it. Okay, so anyway, with time and sales, this is just an example of the time and sales for the ES. Okay, the E-mini S&P. Now, with time sales, you don't have to look for a lot. You guys have probably heard me in the trading room talking about a flood of selling, okay, or flood of buying, or when it's even or balanced on the time of sales. Okay, so what we need to do is basically, with time of sales, we simply look for floods, okay, floods of selling and buying to drive the market off a trade setup. Now, what I do, I look for time of sales to help me pull the trigger. So if I have a setup on the footprint, what I do is when I have that set up on the footprint, I have my finger on the trigger, okay, on my mouse, ready to pull the trigger. Now, you guys that have been to my home office, you've seen how I trade. Some people say I trade like a DJ, okay, because I stand up most of the time, and I have my right mouse button on my charts. Okay, that's what you guys will hear me. When I'm actually in the trading room, I'll have my right mouse button controlling that PC you guys see in my chart. Now, one of the reasons I actually have my trading platform on the other PC is that so I can actually do things on my charts at the same time trade with my left mouse. Okay, so my left hand does my trading, my right hand does my analysis. Okay, that's how I basically run the trading room. That's how I trade in the day as well. Okay, for me to actually take my hand off my right mouse, there you go. You trade standing up as well. For one thing, it's about physiology. 55% of how you're being. Okay, even right now, I'm presenting to you standing up. Okay, I have to do it with the right physiology. It's almost with trading as well. Most people sit down, they trade. Most people are too relaxed when they're trading. Okay, they're too chilled out in a way. You need to be alert. Okay, one of the best ways to be alert is to stand up. Okay, change your physiology. Yeah, use two mice at the same time. Okay, I recommend it. If you guys are not familiar with doing that, that's why my other PC is used for trading, and this PC that you guys see my charts on in the trading room is used for actual trading. Okay. Basically, the thing is, if I'm, that's how quick I need to be. I cannot even afford, okay, for me to move my mouse off my charts onto my trading platform. I cannot afford to even lose that 1 second. Okay, that is how important it is. Okay, that's how important timing is for me. Does that make sense? Right. So the other thing is, what we need to do is also watch on the time of sales and watch for larger individual sizes, okay, for clues. Now, this is different for every market. Now, on the E-mini S&P, it's usually 100 lots, 200 lots. That's why I filter my time of sales on the E-mini S&P to 10 lots or more. Now, even sort of 70s, sometimes a lot of traders think they can get away from, you seeing their trades by putting on a 99 lot instead of a 100 lot, or maybe putting in a few 10 lots, 10 times in a row, so to hide, or maybe 50 times in a row to hide a 500 lot trade. But you can see that in the time sales. You can pick that up with evidence. Okay, you can pick that up with experience. Now, on other markets that are not as liquid, most of the other markets we trade are between sort of 100,000 contracts a day to 200,000. That would be like crude oil, gold, the YM, the Dow, Russell. Now, those markets, anything sort of approaching even 9s and 10s are good movers. Okay, that can have a pretty big effect. I mean, it only takes one trade, okay, to turn around the market. It only takes one good trade and people to follow that, okay, and jump on top of it to make the market move. But you have to have a look at where that trade happens. If there's like a 20 lot selling on the Dow, close to a high volume node on a market that's maybe just giving us a bearish divergence of our value, then we know that, wait a minute, there's some decent selling there off that high. So, we can actually, what I do is I'll look for the setup that I'm going to show you on the footprints, and then I'll watch the time of sales to time the entry. Okay, so I'll wait for the setup. And you don't always see it on the time of sales the way you want to see it, but it's a good way to get into it. Okay, the DAX is exactly the same thing, David. The DAX is the same. The DAX is one of my favorite markets. The DAX is the same thing. Whenever on the DAX you see 6s and 7s, they usually can have an effect. But anything like you'll often see like on the DAX, someone puts in like a 10 lot, 13 lot. 13 lot, for some reason on the DAX is quite popular, okay, and that moves the market as well. Okay, so what you see is buying, yeah, absolutely, Amir, buying floods. Well, it depends on how your volume is filtered. Now, the thing is, if you see 1,001 lots coming in or 2 lots, one after the other, of course it's going to move the market. And the floods are buying and selling. You got to remember, okay, that the question here is: buying floods are all low volumes? Is that enough to move the market? Now, it is. Okay, because on the S&P, maybe not. You're going to see 1s and 2s all the time. But on a market like the Dow, most traders are going to be putting in 1s and 2 lots. Okay, and that's all it takes. A load of 1s and 2 lots coming in at the same time is all it takes to make the market move. The DAX, crude oil, gold, any market, you think about it, right? Okay, only trades less than 200,000 contracts a day. You'll find it will move off 1s and 2 lots. Okay, but it's not just one lot. Okay, 1, 2 lot. It's not going to move off that. Okay, Amir, it's going to move when you see a flood of them, loads of them coming in at the same time. Now that might be maybe 100 of them. It might be just 20, 30 of them. Okay, but that's now 20, 31 lots hitting the same price as 60 on the Dow. That's quite big volume hitting the bid. Okay, at the same price. You get what I mean now, yeah? Good. Okay, so you got to also remember that most traders, big traders, don't put on their positions in big size. I mean, it's impossible to put like a 20, 30 lot or 50 lot in on the Dow and get filled all the time. So most of these traders will use icebergs. Okay, now you can do this with XTrader. You can do it with Turbo Trader, some other trading platforms as well. Not all trading platforms let you put these in, but you can put icebergs in where maybe, for example, you want to sell or buy 100, and you choose within which range, within 5-tick range or a 10-tick range, and then you work in that trade, okay, as 1s and 2s or 5s or whatever. Okay, so you work in. That's why it says be aware of icebergs. Large trades can be worked in smaller chunks. So that's why on the S&P as well, sometimes you see, most of them smaller trades are going to be chucked in as 10 lots. Okay, so that's why I don't filter the volume on the Dow, the S&P, the Dow, the DAX, the crude oil. I don't filter the time and sales volume because I know there's iceberg trades coming in. Okay, loads of 1s and 2 lots being chucked in at the same time with an iceberg trade. Okay, so that makes sense? Important to get that, guys. Very important. So good question, Amir. So make sure you get that as well, yeah? Okay, so now we're going to move on to the footprints. Okay, now you guys are going to get these slides, and I recommend you print these out. Okay, in color if possible, and put them up next to your screens for the time being. Okay, get used to them. Now I've got a few here. Okay, for crude oil, gold, etc. Okay, looking for icebergs in the DAX or Dow. Okay, that's from Kelly. Icebergs on every market, Kelly. On every market, there will be traders putting those in. Okay, I mean, one of the reasons like you guys have noticed, I say I don't trade more than sort of 12 lots max. Okay, usually about 9 contracts on the Dow, 12 contracts maximum, because I've realized through my experience. Okay, now you won't read this in most books, and even the brokers won't tell you that. You know, you have to experience it. I was just adding on more positions as my account size grew. I chucked on another lot. Okay, I chucked on another lot. Okay, and now I chucked on another contract. I was trading about 30 contracts in the Dow, and I was getting partial fills, I was getting 2 contracts filled on my best trades. And when I was getting stopped out, I get the full 30 filled, right? It was a bit of a problem, right? You guys can agree if that happens, right? Now, the best trades you get when you get them right, you get partial fills, and then you get the trades where you get stopped out, you get the full fill. That can become a bit of a problem. Okay, now you don't learn that in books. Okay, you've got to experience that to realize that. Has anybody experienced that before? Okay, now the problem with crude oil and the less liquid markets is that you're going to get partial fills. Okay, now that is something that you've got to work out. What kind of liquidity does that market that you're trading allow for you to get trade? Now, even when I trade, if for example, like crude oil, gold, I don't really trade more than 4 contracts. Um, the DAX, I don't trade more than 4 contracts. Liquidity is a problem on those. On the Dow, okay, I can get away with trading 12 contracts, but I'm going to get slippage on some of those positions. I'm going to get partial fills, right? I might get partial, I might put in 12 lot, I might get filled 6. Okay, now sometimes I have to work in positions on these other illiquid markets, which I'll talk about not today, but I'm going to be talking about working in positions, maybe on one of the next webinars, or at least on the 3-day seminar, I'll be talking about that, okay, scaling in. Okay, but yeah, I mean, sometimes you'll have to work in the position. You'll have to maybe, for example, you want to put like maybe 12, 20 contracts on your trade on the Dow. You'd have to put them in maybe 5 lots. Okay, you put in a 5, put in another 5, put in another 5. Everybody understand that? Does that make sense? Does anybody disagree with that? Okay, that's the problem with some of these markets. Now that's why the absolute maximum in terms of now, Thomas, limit order or market orders. Now, limit order, it depends really. You should use, depends on what kind of trade you're getting into. Okay, I always put in a, if the current, it depends on where the current market is trading right now. If the market is trading, the market's only going to be trading the bid or the offer. So this is what you've got to look at. If it's currently trading the bid, okay, and you want to get long, that's okay. Put a limit order on the bid, you'll get filled. Okay, more than likely. If we're trading on the current offer and you want to get short, just put an offer in. Somebody's already lifting the offers. Get in. Does that make sense? However, if we're trading the current bid and you want to get short, okay, you'll have to hit the bid. If we're trading the current offer and you want to get long, you'll have to lift the offer. So it depends on what position you're trying to put on. Okay, so if you're trying to get short, okay, and we're trading the offer, put in a limit order on the offer. Okay, but if we're hitting the bid and you're trying to get short, hit the bid as well. Does that make sense? So it depends on where the last trade is. Okay, so always work your position. Now, what I do is on my trading platform, I always have the last trade highlighted. So I basically hit the bid or lift the offer, or put in an offer, or put in a resting bid, depending on where we're trading right now. Does that make sense? Right. Okay, so these are my typical buy setups, okay, on the footprints. These are typical setups that you will see on the mini Dow, crude oil, gold, DAX, the Russell. Basically, most of the markets that are trade sort of 2,000 contracts or less. Now, the markets we trade in our trading room, these are the ones we generally focus on. Mini Dow, crude oil, gold, DAX, and Russell. We've also added in the euro, which is similar. Okay, so now what I want you to do is look on the left. Okay, now this could be exactly the same price setup, exactly the same. Let's just say, for argument's sake, we've just got a range extension, okay, below value, and we're at the 1272 extension. Okay, now we want to buy off the 127.2 Fibonacci extension level. Now, when we're watching the footprints, you should ideally see one of these. Okay, now there's also some more here as well. Okay, so I've got 6 buy setups. Okay, so exactly the same price-based setup, exactly the same level. Okay, one day we might see any one of these 6 footprints. Now, I've just given you 6 examples there. That could be maybe 200, similar sort of things. But now, basically, most of them will be similar to what you see here, one of these 6. Does that make sense? So what I had to do is break this down, okay? So it was quite hard work for me to sort of figure this out, you know, and work it out and sort of break this down, because it's something that is it's not mechanical, okay? It's not something that's going to happen very much the same every single time. So what I've done is worked out some examples, and most of the examples, what I found from my experience, fall within these 6 buy setups and these 6 sell setups. Now I've got some S&P is going to be a little bit different, okay? So, because I know a lot of you guys trade the ES. Okay, so look at this. First setup here, 102 sellers hit the bid. Okay, you're always going to see 0 on the offer on a low. Why? Because the market will only trade the bid on a low. The market will only trade the offer on a high. Now, there's sometimes, okay, the bid and the offer, okay, the bid and offer spread, the bid-ask spread, okay, may sort of widen, or sometimes it becomes the same price. Okay, so that's why sometimes on a high you'll see, you know, some volume on the bid. Sometimes you'll see some volume on the offer on a low. But most times the volume on the offer on a low is always going to be 0. So it doesn't mean, oh, there's no buyers there, let me just get short. That actually means, you know, is actually every time the sellers are hitting the bid, you're always going to see 162. I'm sorry, not 162. You're going to see more volume on the bid. You're going to see 0 on the offer. Okay, does that make sense? Yeah, so look at this. There's 102 sellers on the bid. Now look at that. I mean, let's just say that price was 95s. Okay, 94s. There was, we could, even though we had 162. Now this is actually an example of crude oil. Okay, even though we had 162 sellers on the bid, we couldn't down tick. So what does that mean? Okay, that means there was at least 162 buyers with bids, okay, resting there to cut off that supply. Okay, it had to be more than that. So they cut off all those sellers. So those sellers got trapped. Now watch this yellow box. Okay, now this yellow box on each one of these prices you see is the high volume node. I use the volume price statistics indicator to highlight that. It's basically the point of control fair value price for each footprint, right? You guys understand that? Yep. Okay, so now what you notice is that this footprint, that's our support now. So think of this yellow box as our support. Now we've seen that we're at a level which is support where we expect responsive buyers. Now we've just seen 162 sellers hit the bid and not able to make the market move down. So what happens? What's happened? That's telling you that the market cut off those sellers, even though there was loads of them. There was adequate demand, resting limit orders as demand to cut off that supply. Is that right? Okay, remember guys, it's a zero-sum game. For every buyer, there's a seller. For every seller that's hitting the bid, there's a buyer. For every buyer that's lifting the offer, there's a seller, right? So what most people do, they pick up market delta and they think, oh, you know, it's more sellers hitting the bid. Yeah, that's all I need. Every time I get a setup, every time I see more sellers hitting the bid, I get short. Every time I see more buyers lifting the offer, that means I should get long, because that means there's aggressive buyers. Okay, you know, that's what most people will listen to. They will pick that up on Market Delta's website. They'll pick that up from, you know, some other trading rooms that I don't really want to discuss. Okay, but you know, but that's where they get it wrong. Okay, that's how they get trapped. This is how, when I say, you know, if you just have limited knowledge of order flow, it will work against you. If all you understand that sellers are hitting the bid, I should get short. If buyers lifting the offer, I should get long. Now, somebody that's uneducated, they would say, oh, 162 sellers hitting the bid, there's 0 on the offer. That means there's no more buyers. Let me get short. Do you see what I mean, guys? So it's very easy to get influence to get short there. Do you guys understand that? Yeah. And it's the same thing on a high. Somebody will see, oh, there's loads of buyers here. 300 just lifted the offer. There was 0 on the bid. That means there's loads of buyers and hardly no sellers. That means I should get long. So it's very easy to get stuck with that, you know, get pulled into that trick, okay, that game, okay? But what you need to be aware of, what we look for, and you need to look for, is sellers getting trapped at those lows, okay, on a self setup. Remember, this, guys, is only step 4 and 5 of our game plan that I'm discussing. Step 1 to 3, okay, we discussed that in the Art of Adaptive Trading, the other presentation we did back last year. That's under the video tutorial section of our website, and we discuss it in more detail on the 3-day seminar. So most of you guys are going to be there anyway. But you know, this can be used with any setup. It can be used with any system and methodology. So if you have your steps 1 and 3, where you have a setup, you have your risk reward defined, it can be any system. It can be even an automated system, which you make better and reduce the drawdowns by using Orderflow. Yeah, I mean, it's the art of manipulation. Absolutely, David. So, this is what's happening. Okay, so 162 sellers got stuck there at the lows. So this is when I say sellers got trapped. Now, look for the buyers start lifting the offers above that level. So, say, for example, that was 95s. Okay, 96s, we see, okay, we see 79 buyers. We see 75, 57 buyers here. Okay, notice this histogram in the background, okay, is wider here because there was more volume. Now, this histogram in the background is a volume histogram. So, the more volume at price, okay, the wider the bar. Now, what I did as part of our, to make it easier, basically, in our trading room, this is something unique to our trading room. We actually put a bid and offer footprint on top of a footprint profile. Okay, so in the background, the visual diagram there, okay, the green and red little blocks there, that is what we call a volume profile, or sorry, a footprint profile. Now, the numbers you see on the front is called a bid-ask footprint. Okay, you'll understand the difference, okay, later on. So what we see is that all these sellers got stuck here and they couldn't hit the bid. So what does that mean? Sellers got cut off. Okay, even all those sellers. Now the great thing is if you can identify when sellers got cut off, okay, and then the buyers lift the offer. So we're looking for now initiated buyers lift the offer. As soon as we see these buyers lift the offer, this is, see these white arrows, guys? These are the areas where I personally would think it's a time to pull the trigger. So what I will do, just give you an idea. As soon as I see 162 sellers, my finger is already ready to pull the trigger. Okay, I have my mouse ready with my finger on the left mouse button, ready to click any second now. Okay, now where do I execute after all those sellers have got trapped? Firstly, in this footprint, I would execute here if I can. Now it all depends on how good your timing is and how well you can identify this real time. Sometimes it will set up so quickly and it will go off without you and you won't have a chance to pull the trigger. Now, if that ever happens, guys, don't chase a market. Don't pull the trigger after you've missed the entry level. Now, I always say, if you miss it, wait for it to come back. If it doesn't come back, you're better off waiting because that's going to be losing trade otherwise. Okay, not all the time, but most of the time, if your timing is off in day trading, scalpers are ready to take your money. Okay, they're going to be willing to. Yes, scalper, the volume box there, okay, is something that we can get in our trading room. It's actually, if you import my chart definitions, it will actually import that for you. Okay, it's just a custom sort of. I've just customized an indicator that's already built into market delta, which is called the volume price statistics indicator. Actually, what you notice is that each and every footprint, when you have a footprint displayed like this, you'll actually have a box around the high volume node anyway. But what you find is the default version is very faint and you can't see it. So why did I get in at the 53, the green 53 block? So it's a 57, yeah? 57. Okay, the reason I get in there, okay, is why? Look, 57 buyers lift the offer, only 6 hit the bid. So not only do I know sellers have got trapped now, you've got to ask yourself why. Why? This brilliant question. Why did I do it? Why? And this is exactly how you get the understanding, by asking why. Okay, so not only do sellers hit the bid, 162 sellers, okay, they couldn't break it down through that support. Not only that, 57 buyers lift the offer and only 6 hit the bid after the sellers have got trapped. So what that is pure evidence that buyers are lifting the offers and no sellers are interested above it. So straight away you can pull the trigger there. Now otherwise, 25 over 11 is okay as well. 15 over 11 is okay, but that's quite even. Okay, 11 and 15, only 4 contracts different. 25 over 11, you'll get used to this. As I said, it's not an exact science, but you'll get used to this. But if you just take some of these examples and work with them to get yourself going, okay, what you do is, so what would you do at the 57 on that footprint on the tape? So what I would do, okay, is, for example, what I do, this 57, I will actually see that get lifted on the tape. You see what I mean, Terry? So what I do is, after this 162 has already got trapped here, I would see these buyers. Not only will I see on the footprints, I can only see 57 buyers there, but I cannot see at what pace they came in. And 57 may have been one person buying. Okay, it may have been 3 people buying. If that was 3 people, okay, the 3 trades that come in on the time sales that created that 57, that's even better because I don't know that's big guys buying up. Now, if that was loads of small trade that came in and made it a total of 57 on the offer, now that's still okay. But it's even better if it was loads of big, if it was just a few bigger trades. If it was a few, if it was lots of smaller trades, it's not as good, but it's still good to go with. Okay, do you see what I mean? So what I would do is watch the time and sales. So on the time and sales, this is where you watch it. You'll be watching the time and sales and the footprints at the same time. And when you see the green flood, maybe you'll see a 15 lot lift the offer as a part of that 57. That's when you pull the trigger. You see what I mean? Starting, it would make more sense. I've got lots of examples here, guys. Got lots of examples. So this is going to really, really break it through to you guys. Okay, 25 lift the offer. Notice 15 lot, I probably wouldn't pull the trigger. Okay, I would either get it here. I think, okay, I can lean on that. Okay, 15 lift the offer. 25, okay, that's even better. I'll pull the trigger there. Okay, now look at the next example here. 33 lift the offer, that's okay, but that's about 2 to 3 ticks off that high, that footprint. Now remember, this is going to be unfolding. Okay, maybe that's not even happened yet. You know, we might have just made this low. Okay, and you can't see all of this here. You cannot see this 10 lot lifting the offer, 15 lot, 25. You cannot see that. Remember, when this low is made, you're only going to see, okay, as this is building, you might only see 57 lift the offer. Now, this is where the vision comes into play. You've got to visualize this footprint finished, okay, in the same way we visualize market profile from a longer time frame perspective, finished for the end of the day. In this, you just got to do this very quickly for the next few seconds, within the next few milliseconds. This footprint should get filled with all buyers lifting the offers, ideally. You guys get it? And if it's not, then you know there's a problem. And I'm going to show you what to look for when there's a problem. Okay, so now let's look at the next footprint. Now look at the next footprint. It's the same setup. 1272 extension, divergence. Brilliant. Okay. Somebody else has already got it. Okay. Brilliant. Okay. Well, we're just waiting for our execution setup. Okay. Now we've got 410 sellers hit the bid here. 30 lift the offer. 410 sellers hitting crude oil on the bid. That's a problem if they can't get through. If 410 sellers hitting the bid can only drop the market 2 ticks, that's a problem. You guys see? That's a problem. Now, it's always relevant what market you're looking at. But I know if on crude oil or any market with similar kind of volume, the Dow, Gold, DAX, Russell, if 410 sellers hit the bid and they can only move it down 2 ticks and then the buyers start lifting the offers, that's a problem for the sellers. Now, what we do is take advantage of that and think, sellers have got trapped. You see what I mean? Yeah, the third bar, I mean, right there, by then, Eva Boas, okay, you should have taken some profits and stop at break even. So by that time, that third bar seeing all that selling. But yeah, if you've seen that and hadn't taken any profits and you see all that selling come in, you'll be out. But I'm going to explain that later, okay? I'm just looking at entries at the moment. I'm not talking about trade management at the moment, so I'm going to move on to that in a few minutes. Okay, so what we've got to do now is look at this next setup, okay? Now, what you could do is firstly, you could get, okay, there's 93 buyers here. Okay, there's 92 on the bid, okay? Now, I put an arrow here, even though that's even, okay? But the only reason, as I said, it's not a science. It's not an exact science. It's got to be, you just got to think of this. I'm giving you rough examples and find anything similar to this, okay? Now, I put in the arrow there at 93s, okay? But the only reason I've done that, okay, is because you got to think of this as minus development. The 93 negates the 92, so it's almost like there's 0 at that price. You guys understand market profile? Does that make sense to any of you guys? Okay, if you guys understand market profile, when there's low volume at price, okay, that means that basically we should get through it quickly. So what we'll do is probably look at maybe this 105 that lifts you off over 39. Then you're okay. But however, if say for example you missed that, okay, what I would do, okay, because it wasn't as clear in this footprint. If you compare this footprint to the one before, so sometimes you'll hear me say in the trading room, I say it's a setup there, but it's not as clear. So that means we probably have to come back. Yeah. So what you'll see is the double bottom be put in. So we come up, okay, and then all these buyers get stuck up here, and then you see that high volume has 3 ticks off the highs, and then we come back down. Okay, guys, I know you guys got questions, but I'm going to move on because otherwise we're going to run out of time. And then we can take some more questions later. Let me go for some more examples because a lot of this is going to explain it for you anyway. Then what you see is the sellers come back into this bar. Okay, now why would you want to get long here when only 19 buyers lift the offer? Why? Why? Because when you see this pullback into a bar where the sellers got cut off and that was a high volume node, what you got to do is sort of look at that as support. Okay, Now, what you're looking for is if the sellers come in and there was like 100 sellers there on the bid and there was like hardly nothing on the offer, then fair enough, we want to get through it. But there's only 12 sellers on the bid, okay, and then 19 lift the offer. So that means at least some buying interest lifting the offer there. So that's why you can get the pullback. I often, when I get the pullback like that, it's a very, very high probability setup. Okay, when you've at least seen some buyers, especially when it's coming off one of our setups, we teach you, as part of the art of adaptive trading and in the trading, one of the methods or the setups in the trading plan. Okay, so if we put a double bottom like this, okay, be prepared to be aggressive at times and just put in a limit order there. Okay, I'll put a limit order in. I would just lean on that offer, that price is. Just say that high winning number was 95. Okay, I would put in a limit order. Okay, at on the pullback, I will put it in at 96s or 97. Okay, I will put that in. Okay, now that is a quite an advanced setup. Okay, now most of the time, most of you guys are probably going to start with the first setup. Okay, that's probably going to be the easiest one to go with. That's the clearer one. But this one where we have to wait for it to come back is not the clearest. And it's going to take you some time to go through that and understand that. Now, my favorite setup is this third one here. Okay, now here 103 sellers hit the bid, but this is 2 ticks off the low. But there's again only 3 ticks, three buyers on the offer. Now, but look at this. Okay. Now, the next price up, still more sellers on the bid, but that was quite even. So we'll ignore that, okay? Because there's 19 sellers on the bid, 17. I'm not going to argue about a couple of ticks, right? Now, next price, okay? This is where I say, okay, this is ideally where you would get it. There's only 10 sellers on the bid, 36 on the offer. That's like almost 26 more on the offer. So that's better, okay? So there's a good negative, good positive delta. Otherwise, what you do is get in when you see this. You see all these zeros? You got went on. You're not going to see this on the S&P. You're not going to really see zeros in a footprint like this. You'll see this on mini Dow, crude oil, gold, DAX, Russell. Any markets really that trade less than 2,000 contracts a day. Sorry, 200,000 contracts a day. Never trade a market that only does 2,000 contracts a day. Okay. Everybody see this? You guys have probably seen this in the trading room. Anybody seen this in the trading room before? What that means is very strong momentum from the buyers. So you might just pick up the 23 lifty offer, the 35 lifty offer. But when you see something like that and you see 0-0 on the bid, okay, you can afford to get in here. You can even afford to get in at 64 when the 64 lifty offer, the 50 lifty offer. Okay. Why? Because that means the buyers lift the offer very quickly at sequentially higher prices. You see what I mean? Yeah, absolutely. Evil Grass is a masterpiece. Okay. What that means is there's not only buyers lifting the offer, they're lifting the offer with momentum. They're lifting it with momentum. So that means they're not only lifting offers, they're lifting it very quickly, and the sellers are not able to respond. So what does that mean? Straight away, that is my favorite setup because I think the sellers ain't got a chance. We just had a buy setup. We've got 80% chance of this paying off. Okay. Now, we've just seen sellers trapped. We've just seen buyers lifting the offer, and the sellers have done nothing about it. Bonus, that is a trade you guys should be looking for day in, day out on mini Dow, crude oil, gold, DAX, and Russell, right? That is probably one of my favorite setups, and I will see that automatically, and I think, damn, pull the trigger. No hesitation, no questions about that, okay? No questions at all. Does that make sense, guys? It's a giveaway. Yep, it's a dead giveaway. The market's given that trade away to you, and you should take it. Definitely. It's a giveaway. So that's my favorite. You'll see that on the Dow, the crude oil, gold. Sometimes it's going to move very quickly, and sometimes most of the time, you'll be very, very good to get the first arrow there. Okay, more than likely, this footprint's going to build, and then you're going to have to get in on the next footprint. That's why I put the next arrow there, because more than likely, when you see the zeros on the bid and the buyers lift the offers, okay, there's just going to be so quick that you won't be able to get in that footprint. That's when you have to get in on the next footprint with the time of sales. Okay, there you go, Kelly. I'll just answer your question. Yeah. So yeah, a lot of the time you won't get enough time. Okay, but sometimes you'll be quick enough to get in there. Okay, so if you miss it, you'll have to wait for it to just retrace a little bit and wait for the next footprint to open, and just make sure there's still momentum. Okay, so you maybe look at the time of sales. Is there still a flood of buying? Is it? Do we pull back? Okay, how do the buyers lift the offer in the next footprint? Okay, so you try and catch that. Yep. No, David, it doesn't cause any. You never know when the footprint is going to complete. The thing is, you never know when the market's going to do anything. You never know for sure. And so all we've got to do is as it's unfolding in real time. But this is what I'm trying to do is help you create a vision Okay, so what we talked about was commitment before. Okay, you got to hold this vision. So each one of these footprints should be there in the mind's eye. Okay, in the screen of the subconscious as something that should take place. Okay, but once it starts to take place, you should be able to recognize that and almost play Snap. Okay, if you guys ever play Snap, the card game Snap, you should play Snap. Okay, so as soon as you see it, you should be able to, oh damn, it's there. Let me pull the trigger. Now, if it doesn't unfold like what you see here, thank you, Kelly. It's good stuff, right? I told you I put a lot of time and effort into this. If it doesn't unfold like what you see here, this is your vision. Okay, it's not. You can't wait for this to happen. I'm gonna. That's why I'm gonna do a playback, and I want to get through this quickly because I'm gonna go for the playback, and you want to see it unfold in real time. Okay, so I'm gonna get through this quickly, guys, and then we're gonna do playback. Okay. We've not got much time actually. About an hour, 10 minutes. Okay, so let me get through this quickly, guys. So, guys, if you want to just hold off with the questions for the time being, okay, because a lot of your questions are going to be answered throughout this presentation. And then we do a quick Q&A at the end, okay? Yep, no problem, Joe. Right, so these are the other footprint setups. These are things that you'll print off, and these are your visions, okay, that are on the screen of the subconscious mind. Now, look at this, okay? Now, this is 4 ticks off the low, okay? The low here, all these sellers here, 50 sellers, 46 sellers. Look at this. Now, this is an example where 112 buyers lift the offer and only one on the bid. And again, you see that this is probably going to move very quickly off that. But whilst these buyers are accumulating here, okay, that's where you want to be. A more aggressive entry will actually be in that footprint, okay? And then if not, then you'll be able to get in just as the buyers lift the offers above it. Now, the next footprint, okay, again, these are examples for the more lower volume markets. Okay, now the next footprint, notice here, there's a lot of selling in this footprint. Even the delta, I'll put the delta there to show you it was negative. So you wouldn't get in this footprint, but notice a high volume node here. Okay, that's sort of like a balanced market. So think of that like as a point of control. Now, you guys don't understand market profile. Sometimes we wait for the market to pull back to the point of control and wait for the trend to continue, right? It's the same thing, but this is from just like a footprint to footprint basis. Footprints are nothing like very small sort of market profiles that are formed from one, 1 second to another, okay, or a few minutes to another. Now, we'll notice here, the high volume node is held, okay, but here, now there's not a lot of buying here on the lows, right? Well, why would you pull the trigger there? Because you're anticipating that the buyers are going to lift the offers off that high volume node based on the fact that there was a delta divergence here. I'm going to go to delta divergence in a second, okay, and the fact that there was delta change that was positive here as well, which I'm going to break to in a second. Now, the next thing, I've got another question here. Do you ever look at mini profiles on higher time frames than just the entry footprint, i.e. 5 minutes? I used to, but then it just gets too much to look at. You can do that. I look at 30 minutes sometimes. You guys see my 30-minute footprints. But, yeah, it's like you just don't have enough time, basically, Carlos. That's the only problem. You just got to basically identify this. It's always going to take place on a smaller time frame first. So it might mean you have to get in a few times, but that's all. Okay, so the other thing is you can see here, 21 sellers hit the bid, only 4 on the offer, but there's high volume there. So the high volume node, yellow bar, 2 to 3 ticks off the low, so that's okay. Then you see buyers start lifting the offer, but again, there's low volume on the bid, but buyers lifting the offer above this high volume node. So you're okay with that as well. Again, the high volume node, 2 to 3 ticks off the lows. Okay, there's only 2 lots here. Okay, so why would you get in there? Okay. Because that means there's strong momentum. That's all it means is that's probably going to go very quickly. Okay, so all you're looking for is a high volume node to hold, but this is a double bottom as well. Okay, but as I said, don't worry if you don't get all these straight away. Print these off and look for them each and every day. Okay, but as I said, there's a couple that I'll show you that the most popular. Okay, that I'll look at most importantly most of the time. But these others on the second page are really the ones that aren't as easy to pick up. Okay, so don't worry. Even I have trouble picking these up all the time in real time. Most of the time, these on the second page, I actually leave alone because I can't see it clearly quick enough, okay? So I would wait for the times when I see those first few examples that I showed you. Right, guys. Now, what we also need to do is look at the higher volume markets, like the E-mini S&P, for example. Okay, now I know a lot of you guys look at the E-mini S&P. Now look at this buy setups, for example. I said E-mini S&P, Dow Jones, Euro Stocks. Really, any market that trades more than sort of over 1 million contracts a day. Okay. So notice here, I mean, why have I put this here? Because, I mean, you can be pretty much guaranteed. These are looking at market profiles, footprint profiles after the fact, okay? So that's why I wanted to go through the playback very quickly. So I'm just giving you an idea of the sort of things we're going to look through on the playback, okay? Now, here, you can be pretty sure that when these 1135 lift the offer over 237 on the bid, okay, that high volume node was down there at some point. Okay, now notice also this market made a low compared to the previous footprint with a delta divergence. Okay, that's why that green arrow is there. Okay, that means the delta for this whole bar as it was forming, okay, probably would have triggered off this green arrow. Okay, now that's automated in my charts if you have Market Delta Professional, if you import my layout. It's one of my favorite things. If I see that trigger up, then I just okay, let me look for the time of sales and footprint to get in. Okay, I already have my setup. I've worked out my risk reward. All of that's been done as part of 1 to 3 of the game plan. Now that's a good place to get in. Now if you miss that, okay, you won't really get in here. There's too many buyers close to the high of the footprint, and there's a lot of sellers there. 19,000, almost 2,000 there on the bid. Okay, almost just over 2,000 on the offer. So it's quite even there. Now what you do is maybe in the next footprint you can get in here when there's 5721, but that's leaning on that high volume node. So it's using that as support. So you can get in there. Okay, knowing that we've just come off that 1135. So if you miss the first entry here, you can lean on that there. Okay, when we talk about leaning on particular prices, it means just leaning on volume or leaning on a particular setup. You're leaning on a particular price. Okay, looking for buyers lift the offer. So when we look at these yellow blocks, these high volume nodes, you're leaning on them, looking for sellers to hit the bid below it, or buyers lift the offers above it. Sometimes you'll find that you'll actually have the setup and the buyers continue to lift the offers above the high volume node. Say for example here you had 2,128 sellers, okay, buyers and 960 sellers on the bid, but this is this is coming off the VWAP, first standard deviation low, that green level there. But what you see here is that all those buyers above it, okay, that's why it continued to move up. So that's why you wouldn't really get short there. Okay, but it's also not at a good trade location price for us. So what we do is look for the pullback. But look at this, 3,046 buyers, okay, leaning on this high volume node. There was more sellers in this high volume node as 1 tick off the low. Okay, 3,046 buyers over 748 on the bid. Now that's a significant difference. Okay, if you can get in here or the price just above it, that's all good to go. Okay, even if you get in here, okay, when the buyers start to lift the offers, a couple of ticks above it, that's okay as well. Now here in the S&P, this is probably one of the favorite setups. When you see, 1 tick off the low in the S&P, you see loads of volume on the bid. Usually over 1,000 contracts. Okay, even better if it's over like 2,000-3,000 on the S&P, and then you see only sort of usually around 500 or 600 on the offer. That's quite low volume for the S&P, and then you see all of a sudden buyers lifting offers. Now notice the buying volume is quite low, but that means 569 lift the offer, but there's only 127 on the bid, so that's good to go with. As long as buyers are lifting the offer with more volume than sellers hitting the bid, okay, that's good to go with. You lean on that support. The other thing is that we've got a delta divergence. Look at this delta, the volume breakdown indicator, green arrow is there. Okay, so that's telling us there's more buyers. Okay, and that will probably trigger off at some point during these first couple of ticks above this high volume node. Okay, now the footprint setups for the ES for shorting. Okay, some examples there. Sorry, this is self setups for the crude oil and Dow. Okay, in these lower volume markets. Now look at this: 44 buyers at the highs. Okay, and then sellers hitting the bids. 9 hit the bid, 11 hit the bid, but we're seeing sellers hitting the bids above, below that high volume node. That high volume node is right at the high. So think of that as resistance. What you want to do is watch the time of sales when this unfolds. Okay, I'm going to get through this quite quickly now, guys, so that we've got about an hour. That's why. So I want to do the market replay because that will make it drill it in for you guys. Is that okay, guys? Okay, guys can always go over these and print these out and review it afterwards, but there's not that much time. That's why we've got to get through these quite quickly. Okay, so you can see here, what you notice here is the 27 buyers at the offer. Okay, now, but what I'm comparing is here. I've got all these buyers up here. They're still tracked here. All these buyers, 202, 175, 337, they're all still up here. Okay, now the sellers start hitting the bids. Okay, 1 tick off the high, 2 tick off the high. Okay, now the other footprint setup we always talk about is, if you see buyers buying, 2 to 3 ticks off the lows, that's good for the market to reverse and go up. If the sellers are getting involved, okay, 2 to 3 ticks of the highs, that's good for the market to unfold back towards the downside. Now, this will be very common what we saw today in the down move. When we got a little pullback, we actually saw this little bit of a pop-up, only a small pop-up. Okay, and then the high volume node is just one tick, one or two ticks off the highs, okay, in this footprint, and then the rest, we start to see sellers in the bids below it. Now, the rest of it might not have unfolded yet, but that's where you got to pick it up in real time. This is the art that you got to develop. Remember, an art is a superior skill that you develop through experience, so it's not going to come overnight. This is not scientific. That's what I had to say that before. Now, this isn't going to be, you have to look for this, and this exactly. It's not a rule-based thing. It's just giving you some ideas of what needs to be your vision, okay, of what should happen and unfold in your three-dimensional reality, okay, that you need to be able to see manifesting. And as it's unfolding in real time, that's when you need to execute. So I'm giving you examples after the fact here, right? But remember, it's all going to come with experience. Exactly, Richard. So here we've got some more examples here. 16 hit the bid, okay, over 11, but sellers are hitting the bid only 2 ticks off the high in that footprint. That's good, and the high volume node is out. Now we might not get in there. We might have to get in here when 10 hit the bid, okay, and 0's on the offer. Okay, we might miss that and think, oh, that's happened very quickly, and then the next footprint builds. We see 14 hit the bid, we can get in there over 5. 10 hit the bid. Okay, sometimes you're going to be a couple of ticks off it. It doesn't really matter, but if you're using this, okay, it's all good. Now these are some self setups that we got for the S&P, crude oil, gold, and DAX, and again as well. Some more examples there. 86 hit the bid. Okay, again, sellers hitting the bids 2 to 3 ticks off the highs. Notice you can execute just below that. Okay. Okay, 26 hit the bid over 22. As long as more sellers are hitting the bids below it. Okay. You'll get used to this with experience. Now look at this example here. There's 100 lift the offer. So there's a lot of buyers there. Okay, but the high volume, the yellow box is there. Okay, just above it. But all of a sudden, sellers start hitting the bids below it. So you can get in there. Now in this case, you had to get out and get back in again. Okay, right here. 200 hit the bid, but 2 to 3 ticks off the high, sellers are hitting the bid. Okay, anybody losing me, guys? If you're losing me, that's okay. But just make sure, just trust your unconscious mind to take this in. So these are all on the footprint examples that I've got for you is a 7 range footprint, but they'll be very similar on the Dow. As I said, these will be exactly the same pretty much on crude oil, gold, DAX, and the Russell. Okay, you've got to look for something exactly the same as this pretty much. Okay, it won't be exactly the same, but almost exactly the same. Okay, so it's a 7 range footprint. Jason, 7 tick range footprint. Okay, that's what we use on the Dow. We use the same on the gold. We use the same on the DAX. Okay, so 7 ticks range, and the same with the Russell. Right. Now on the S&P, okay, some sell setups here. Look at all this. 5369. We saw some good examples of this kind of action today. Okay, look at this. 1996 hit the bid. 5369 on the offer. High volume node off the highs. As soon as we start seeing that, all those buyers trapped up there, that yellow box will be up there. As soon as we start hitting the bids below it, you see something like this, 2,248. You might not be able to get that price with 762 lift the offer. You might get the next price. That's good enough. Where 1595 hit the bid. Okay, that's good. Okay, just get in there. Okay, now you might miss that and think, okay, oh damn, it's bought. Let me come back. Okay, wait for the market to retrace a little bit into this range, and then you see all of a sudden 2027 hit the bid over 835. This is a significant difference. Now the delta there, the delta is the difference between the net buying and selling. Now the selling is the volume on the bid. Okay, the buying is the volume on the offer. That's on the right hand side. The selling is the volume on the bid on the left hand side of these footprints. Now, if there's on the S&P a delta of maybe 1,000. Okay, negative 1,000, that's good for a short. There's a delta of positive 1,000, that's good for a long. So here's another example here where there was like 1,800. You can just about read that, but 1,800, okay, on the bid, 487 on the offer. But also watch here, there's a red arrow. So that market made a new high. The delta was negative. Okay, even on the high of this footprint, that delta would have already triggered negative. And then you might get in here where 414 hit the bid over 64, or the next footprint, okay, where you look for the retracement back into this range of this footprint. So just give me some ideas of the areas where I would look to execute. Okay, and you guys can probably mirror that, okay, and do exactly the same. Now, the other thing is here on the S&P, now this is 3 ticks off the high, okay, so it's not the best setup, but you can still go with it. But we can still see there was 2,208 sellers, okay, it's pretty even there. But we can see afterwards there was like 667 sellers hitting the bid and only 22 on the offer. You might not get that price, but you might get the next one. Otherwise, you wait for the next footprint and you see again 1238 sellers, okay, over 618. So there's still a significant difference between the bid and the offer. Right, guys? Now, I'm going to talk about volume breakdown divergence, but I'll do that in the playback. Okay, so I'm going to continue now, guys. Now, guys, let's have a quick 5 minute break again, guys, and then we'll continue. Let's have another break, okay, for about 5 minutes, and then we continue, guys. Everybody okay so far? Okay, I do want to get onto the playback and also the trade execution stuff as well. Okay, because this is trade. Sorry, that is a trade execution setup, but I've got to. That's only looking at it after the fact, so that's obviously no good. We've got to look. We've got to look at the markets as they're unfolding in real time. So that's why I want to do the playback, because you've got to look at how you would approach it in real time. Okay, what you need to see happen. So sometimes it's so quick in real time in the trading room. You know, you guys can't pick it up as quickly, but you know, over time, you know, a few weeks, a few months, you pick it up. But I want to reduce the time that it takes for you guys to do this. So my whole purpose, okay, of running the trading room and being a trader's coach, my highest intention, okay, I always say my highest intention in life is to help people. Right now, the best way I can help people is to save them time. Okay, save them time by not having to go through the things that me and Brian have had to go through in our lives. Okay, so that you can use that time in order to do other things that will serve you better, you know, such as use that time to spend time with your family, you know, use that time to, you know, actually be trading. So what we'd want to do is save you learning time, okay, so that you don't have to go through the experiences in order to get the same understanding. You guys see what I mean? That's what we're trying to do, okay? So the learning will only, sometimes the understanding only comes through experience. So if you can't get that experience yourself, sometimes you have to get that understanding from somebody else that has already got that experience. So what I try and do is teach you my understanding from my experience so that you guys don't have to go through the same experience in order to get there. Okay, so that's what it's all about, just saving you guys time. David, Dave O'Brien. I've just seen your reply there. Yeah, absolutely. Actually, I really like that. Dave O'Brien's just commented here. It's much like Chinese philosophy, which basically says when we have one extreme in a parameter, nature intervenes to cause a change in that parameter to the opposite. It's actually absolutely right. It's exactly what happens. Yeah, it's very interesting. You know, this shows up in trading and everything in life. Absolutely right. You know. Right, guys. Okay, we're ready to roll. Let's keep going. Okay, so I just want to. I'm going to talk a little bit about risk now, guys, because this is when we're talking about trade management. Okay, once you pull the trigger, you're in the trade. Now, what most traders struggle with, okay, is not technical analysis. It's not understanding auction theory. It's not understanding what might happen next, you know, few days in a row, whatever. It's not sometimes even pulling the trigger. Some traders are trigger happy. They actually have the opposite response. Some guys, you know, have the deer in the headlight syndrome. They cannot pull the trigger. Some traders actually have no problem pulling the trigger. It's what they do after it. They also have, the problem is they have a problem pulling the trigger, getting into the trade, but also have a problem pulling the trigger when they want to get out of the trade. So they're too quick to get into the trade, but also too quick to get out of the trade. Now, other traders are too late to get into the trade and then too late to get out of the trade. Now, what you've got to do is find the balance, right? You've got to find the balance between getting in quick enough, okay, and then, you know, being, you know, getting out quick enough as well, but when you need to, okay? So it's all about managing risk, okay? Trading is all about managing risk. It's all about managing risk. You know, we always talk about in trading, the better you manage your risk, the better results you're going to have, basically. You know, all of this other stuff, you know, technical analysis, market profile, even order flow, you know, that's all good for executing the trade. But, you know, it's also, what most people forget is that when you've gone into a trade, you also can use order flow to reduce risk. Okay, now this is one thing that I've learned how to do very well, so that I can actually now no longer expect my stop to get hit, because I can get out without my stop getting hit by using Orderflow. Now, I just wanted you guys to firstly just develop a different kind of mindset. I'm going to use another metaphor here. Having problems with sound again, Judy. Judy, you having problems with sound? I'm not sure. Anybody else having problems with sound? No, nobody's having problems with sound. Sound is good. Sound is good. Julie, maybe you want to just put your speaker's volume right up. It may be a contention ratio issue or something like that, an internet issue on your side. It seems to be, out of all the people we have here, it seems to be the only one that's having a problem at the moment. So I'm not quite sure why it is. It might be your bandwidth or something like that. But it's all fine everywhere else. So it's not on my end, unfortunately, Judy. It's not something that I can change, because my change won't have any effect. So it's something on your end there. Judy, if you can hear me, can you hear me? But you will get the video, so maybe the video will be put a lot better, because obviously that's not coming through your internet connection. So I just want to make sure you can still hear me. Can you still hear me? Right, guys. Okay, I'm not getting any reply here, so I'm just going to continue, guys. We haven't got much time now. Okay, let's move on. So let's take a different outlook on risk and trade management. Now, what we need to do is we need to make the move towards a different outlook on risk. In essence, okay, you got to think about this as it's like jumping out of an airplane. Now, this is just a metaphor that I've come up with, really sort of explain it well. Now, if you use this metaphor, it's as if when you jump out of the plane, it's like it's the moment where you took the trade. Okay, having jumped, the situation itself and the experience of free falling through the air becomes a new context that defines your experience. And it's just the same as with trading. Okay, having taken the trade, it's now the situation of being in the trade. Okay, and that experience, okay, of being in the trade, that becomes the new context that defines your experience. Okay, once you are in the air, you only have one choice. Okay, you cannot jump back into the plane, right? Unless you have some super abilities, okay, which you'll have no problem trading with, because you can just get back out of the trade every time you get it wrong and just pretend it never happened. So you know, it's like once you're in the air, you know, you have no choice. Okay, once you're in the trade, you have no choice. The only choice you've got is to manage the fall, right? So the opening of your parachute and your landing, okay, is basically what you've got to focus on. Okay, it's like once you've taken the trade, we've got no choice apart from managing our risk and making sure we don't lose as much as maybe our stop may allow us to lose. Okay, because obviously the stop is there. That's going to protect us anyway. We already know that. It doesn't take a rocket scientist to work that out. Everybody knows the stop's there. Okay, yeah, if it gets hit, that's it, I'm out. But don't let that be the only reason you get out of a trade. Okay, now I'm not going to wait, okay, if I jump out of a plane until I hit a mountain. Okay, you see what I mean? Does that make sense? Would you wait if you jumped out of a plane, if you can see you're about to go straight into the edge of a mountain, okay, would you just wait until that happens? Would you wait if you can see you're going head first right into the edge of a mountain? You've just jumped out of a plane. Would you wait until you've hit the mountain? Anybody? No. So why wait until your stop gets hit to tell you that you're wrong? Right? Seems a little bit crazy, right? Okay, so the only thing you can do is focus on managing the risk. Now, what I would do is maybe see if I can move myself out of the way. Okay, so I don't have to hit that mountain. Okay, maybe I can position myself in a way that I can maybe deter myself and move myself away from maybe moving towards that thing that's about to kill me, right? Okay, but you know, main thing is once you're within the experience, okay, yeah, David, you never look at stocks the same again. Okay, once within the experience, your focus and attention automatically shifts, okay, to a very powerful sense of being in the now and in the present. That's exactly what needs to happen in trading. Now, I've never actually jumped out of a plane, but it's something that I'm planning to do very soon. Okay, when I actually wrote this, I thought, oh, wait a minute, I need to jump out of a plane. Okay, to just really drill this in. Now, I think all of us should maybe we'll have a day out. All the L2ST traders just go skydiving or something. If you guys are up for it, we'll organise that. Okay, so once within the experience, okay, your focus and attention automatically have to be on the shift. Okay, it needs to be your experience needs to be shifted on the powerful sense of being in the now and in the present moment. You shouldn't really be thinking about, okay, I might hit a mountain, okay, or you know, I might land in the sea, okay, or whatever. Okay, you're not thinking about that, are you? You're thinking about, okay, look, I've jumped out. My vision is I'm going to put my parachute and land safely on the ground. Okay, that's exactly how each trade should be. Your vision should be just, I'm going to see this trade through so that I don't have to allow for my stock to get hit, okay, before I can tell myself that I'm dead, okay, or that I'm wrong. You don't have to wait for that, okay? Now, the other thing is, having made the commitment, okay, the whole point of talking about commitment earlier is that you've already made the decision, okay? You've already made the commitment, okay, to jump, okay, before you even got into the trade. You've already made the commitment to the trade and to the trading game. So you have no alternative but to manage your flight through the air. Okay? Your thoughts, opinions, your feelings, your past history have very little to do with your handling your experience. Now, if I'm going head first into a mountain or I'm about to land in the sea and I've just jumped out of a plane, it doesn't matter what I think about, okay, about the past, okay, it doesn't matter what I think about, okay, or hope for or pray for, okay, about the future. The fact of the matter is, if I'm going into a mountain, I'm going into the sea, it's going to happen. Okay, so the only thing I can deal with is what's happening right now. Okay, in the present moment. The past, the future has nothing to do with it. Okay, it's all just an illusion. Okay, so just let that go. The only thing you need to be focusing on when you're in the trade right now is what's happening with order flow. What is actually happening within the market right now once I pull the trigger. So how you respond to that event yourself after the jumping is critical to the issue. Okay, and that's exactly in trading as well. Okay, what's important is what you do after you take the trade. Now, we do a lot of work before we get into the trade. We've got 4 steps in our game plan before we even pull the trigger. However, that's because we want to make sure we're in the most prime location, the most prime position to take a trade. Okay, the best business decision we can possibly take. So we have less of a need to have to worry about what might happen next. We have a higher probability that we're going to hit the ground, no problem, and have a safe landing. Okay, does that make sense, guys? Now, so the same principles apply to trading. You have to go beyond the planning. You have to go beyond the planning analysis stages and take action. You have to move beyond the reasons why it won't work. Okay, your task is to act consistently with your declaration and commitment that you've already made. Okay, learning to trade in the gap between where you are and where you wish to be. Now, this is all about being in the present moment. Okay, I always say have the vision of what you want to achieve. Okay, that's where your intention is, your focus, your attention, your energy, okay, is all on that vision. Now I'm going to show you a simple metaphor again, which will help you do that in real time as well. Okay, exactly what I do each and every day with every trade I take. I pretty much, I have such belief in my vision because I see it manifested so often that I very much doubt the fact that I'm going to get a losing trade. Okay, but having that kind of mindset is a lot different to the majority, okay, which will have the mindset where their focus and attention is, and their intention and the vision is always going to be on what they don't want to achieve. okay, rather than what they want to achieve. So now what we're going to do is look at some L2ST order flow patterns for trade management exit. We've looked at some for managing the trade. Okay, so let's just look at some for actually exiting the trade. Maybe yeah, absolutely, law of attraction. Everything is energy. What you focus your attention on. Now, a lot of people think about law of attraction. You guys, some of you guys who've seen The Secret, okay, the video. Now that was good, but they missed out a big chunk of. They missed a hell of a lot out of that. You got a lot of people just sitting there focusing their thoughts and attention on what they want to achieve and just hoping and praying that they've got to get it. Now, it's just not going to happen because you've not. Has anybody seen The Secret? Okay, or understand the law of attraction? Covered any of Abraham Hicks's stuff? Okay, now I'm a big believer in the law of attraction. Okay, however, I'm not a big believer in. If you guys haven't, you're new to the law of attraction. Okay, and I would recommend you get a book by Abraham Hicks. Okay, I think it's actually Esther and Jeremy Hicks or something like that, but it's Abraham Hicks. It's called Ask and It's Given. It's a really good book. It's actually came out way before The Secret. The Secret just made it a little bit more mainstream. Okay, the law of attraction, but I don't. The Secret was good, but it was okay. I mean, it missed out a big. I mean, the main thing is it's basically how you're being. The what you focus on in terms of how you are as a person and how you're being. Your gratitude and coming from a sense of a higher sort of a harder state of being, basically. Stay in a more positive state. Okay, that's the main thing. That's what NLP is all about as well, just bringing yourself in a positive state. But if you're in a positive state, that's what you generally attract. So it's sort of energy, like energy attracts like energy. So if you have negative energy, you're going to attract negative outcomes. Okay, if you have a positive energy about yourself and you're being in a positive way, you're going to attract more positive outcomes. Okay, now just being in that way is generally not enough. You have to do something from that state of being. So you have to do something as well. Okay, it's ask and it's given. David Nevin, Ask and It's Given by Abraham Hicks. Okay, it's a really good book. I recommend you get it. I mean, and actually watch The Secret as well. It's very good about just sort of learning the laws of attraction. Now, the most important thing is that but you got to you got the vision. You visualize and sit there, but just visualizing isn't going to do anything. Okay, now that's your energy and your intention focus somewhere, but you've got to actually do something whilst you're focusing on that energy, whilst you're focusing on that intention. Now that's the same thing in trading. If you just sat there and visualize the winning trade after winning trade, it doesn't mean you're going to get a result, does it? Okay, it doesn't matter how much you believe in the law of attraction. Now, if you're never pulling the trigger, the fact of the matter is you're not going to get any result. So you have to actually do something. You have to take action from that state of being. You have to do something with that visualization, with that state of being, and then do something from that state of being. So I always say, you be, do, have. Okay, rather than a lot of people believe that you've got to have something in order to do something, in order to be a particular way, such as have loads of money in order to do certain things, in order to be happy. But if you just be happy, for example, or be in a positive state, okay, be appreciative, show gratitude, for example, just focus your attention on somebody you love, okay, dearly. Focus your attention on that. That will make you feel in a good way. Now, if you trade from that state of being, okay, you're going to have that kind of energy. So now what you're going to attract is more things that give you that way of being, more ways of being more happy. Okay, but you have to do something from that state of being. So you have to take action from that state. Does that make sense? So you have to do something. So you have to. That's why I say when you hold that vision, you've got to now take action from where you are right now. Okay, and then see through with that action and your behaviors from where you are right now through to where you want to be. Okay, until you get the result. Your vision is basically the result you want to achieve, but your action that you take and the behaviors you take in reality is what actually brings about that vision into reality. Okay, and manifests that reality. Okay, but having the vision and having that belief is the first starting point. Without the vision and belief, you're working against your unconscious mind. So your unconscious mind, well, generally, is 99.9% in control, so it's going to overpower. So bringing your unconscious mind sometimes works with some simple techniques I'm going to show you later. Now, risk elimination is our goal in trading, so remember that. Okay, at all times, as soon as we pull the trigger, the first thing we're focusing on is how can we eliminate our risk in this trade. We're not focusing on how can we make money out of this trade. That's not our focus and intention unless we got to know risk. So we're always focusing on risk management and getting to know risk firstly. Now, the other thing we need to do is focus on getting to break even and then no risk as soon as possible. So that's why I always say take a small profit target firstly, get to no risk, and then hold the rest. Sometimes you might have to get out and get back in again, but at least, worst case scenario, you get a few little scalps out of it. For example, you take 3 trades on the Dow before 5-point profit targets. It's better than taking a 10-point stop, okay, or 20-point stop. I'd much rather take 3 5-point targets, okay, than get one full stop out, okay, and be prepared to get into a trade again and pay more commissions. It's a lot cheaper, okay. So what you got to do is use profit target exits and try to hold the vision of where you expect the market to go to, and also how you expect to trade it. So what we always do is we hold the vision of, for example, if we're selling above value, your vision should be that you're going to see the market come from above value in towards the volume weighted average price or the point of control of the day, okay, in towards the value low of the day or the first standard deviation low of the day. Now, the other vision you might have is, say, for example, you're buying below value, you might have the vision that, you're going to see the market retrace back in towards the point of control and then maybe to the value or high. So that's always what our visualization is. That's what we're expecting for the market to do. Because why? Because we see it happen day in, day out. Okay, we're not making it up. It's a vision that is actually a reality that happens more often than not. Now, the other thing we need to do, okay, we use order flow to highlight if the market may turn against us soon after our entry, and if we know, and also, if so, we need to know how to react. So we don't want to be taken by surprise if we get into a trade. So I say about holding the vision of what you need to achieve, but you also need to hold at the same time the vision of what you don't want to happen, okay, at the same time. It's almost like you got 2 images in the mind's eye, okay, like 2 scenarios. You might have 3 or 4 scenarios. Now, I usually have about 4 or 5 different scenarios in my mind's eye all the time. So I know how to react if it happens automatically without having to think too much. So it's all about using these visualizations, okay, of the mind's eye. Now, the unconscious mind works with pictures, through pictures, feelings, and sounds, okay? Your conscious mind works through sensory experience from what you hear, you see, okay, what you feel. But your unconscious mind, actually, most powerful way to work with your unconscious mind is to work with images, okay? It automatically, most of the time when you react to a certain thing or experience in life, okay, or a particular event, it's because an image matches, okay, what's in the unconscious mind screen, okay? So, for example, if somebody starts shouting and screaming at you, your automatic response might be to get angry and shout and scream back at them, okay? So that's automatic for your response, okay? So, that's the same thing in trading. A lot of people, they see, for example, they might get stopped out. Automatic response might be, oh, as soon as I see this, my experience is that. Now, as soon as I see that experience, I need to start, beating myself up. Okay? So these are the kind of things you need to be aware of. Now, the other things we need to be aware of is we need to know how to use the order flow to basically make sure that we can actually see when this experience is actually manifesting, so that we can actually keep ourselves actually taking a full stop out. Okay? So that's what it's all about. So we know how to identify the setup to get in, but we also know we need to know sometimes we might have to get into a trade and get straight back out. Okay, that does happen. You have to get back in again. Okay, and I'll show you some examples of how to look for that. Now, at times, without fear, you need to observe for a good enough reason to exit. Okay, without fear. Okay, so you've got to go based upon don't get out because of fear. Get out based upon what your experience tells you and what order flow tells you. Okay, if you've just got short and all of a sudden there's some decent buying coming in. Okay, maybe you've got a footprint buy set up after you just got short and all the sellers have just got trapped. And we saw some examples of that today in the trading room. It probably makes sense to at least get some of your trade out. Now, your target maybe, for example, 20 points. Okay, but you might have to take 5 points profit just because you've actually had something happen in the present moment right now that's telling you that this market may turn around. So your target may be 20 points, but if something happens right now in the present moment to tell you that you might not hit 20 points, you should take 5 points. Does that make sense, guys? Okay, so don't just sit there waiting and say, I've got 20 point stop. Okay, my stop's at 20 points. My first target is 20 points, but I've just got short, and I've just seen buyers coming in at 5 points now. Okay, in my favor. Okay, but I should just hold my trade anyway. Okay, you need to be able to get out. Okay, and take 5 points, no problem. Sometimes I'll have a 10 point stop. Okay, and a 10 point first target, and I might take 9 ticks instead of 10. But why? because I've got a reason to take it based upon order flow. So get used to doing that with the first target. Now, with the rest of your position, once you've got no risk, you don't have to do that so much. It's only with the first target. Now, you've got to have a good enough reason, okay, based upon your observation of order flow to do it. Okay, you don't just do it out of fear, okay, out of automatic response from fear. If that's happening, then you obviously got to work on that. Now, this is an example of an exit on the E-mini S&P, okay? Now, this is what I talked about earlier, okay? The uh-oh trade, okay? That's what I call it, okay? So it's almost, you know, that's your response, okay? You get it right, I go, uh-oh. That's what I do. That's why I call it the uh-oh trade, okay? So basically, you know, we've got a good setup here to buy. You know, there's 7,364 buyers over 6,173 on the bid. Now, that's quite even, okay? But we see 4,100 if the offer, 2,000 just hit the bid there, okay? So that's good for a long, okay? We're leaning on that high volume. One tick off the low, there's more buying volume, there's a delta divergence. But however, what might happen is as soon as we get into that, we see, oh, all of a sudden, okay, we've got in here, it's just a 3 ticks above us, 4,756 buyers, so 4,755 buyers, sellers, that is, guys, and then 3,437 buyers, okay? Now, again, then we see 2,000, now, we might not get out of there, but if we down tick and sellers still seem to be accumulating, and hitting the bids. Now that's 94s now. 2,357 sellers and only 766 on the offer. Now that means even if you have to take 1 tick or 2 tick profit, doesn't matter if your profit target was 5 or 4, take the 2 ticks, okay? Because that market and move your stop to break even, okay? Fair enough, okay, if it holds there and then goes off, that's okay. But more than likely, if you can see 2,000 sellers hitting the bid, okay, you're on a down tick at least a couple of ticks. Does that make sense? So that means it's going to hit your stop anyway. It's going to come back to your entry. Yeah. So that's what I say. It's time to cover. So you might not be able to get that break even. You might not be able to get in and get a couple of ticks. You might have to wait for it to move maybe 1 tick or 2 tick against you. It depends on how quickly the market moves and how quickly we react. Now sometimes, but I'd be much happier to take, you know, for example, if you had a stop, 4 tick stop here on the S&P, you could see that would have drove straight for your stop. So I'd much rather get out a break even if I can scratch it, or take 1 tick or 2 tick loser. That's why I say on the S&P I'd have a 8 tick or 6 tick stop, but I would never ever allow for myself to experience more than a maximum of a 3 tick stop. Okay, that would be the maximum I allow myself to lose on that market. Now, some of the faster markets like the S&P, the crude oil, Dow, gold, the market can move very quickly. You don't always have a chance to get out before your stop gets hit. But most often than not, what I found from my experience, if I'm in a trade in the Dow, okay, and it moves 5 or 6 ticks against me, it generally moves about 10 ticks against me, no problem as well. Does everybody agree? How many times have you guys seen that? You know that, okay, the market's moved against me, but my plan is, my stop is there so that I should not get out. Okay, most of us approach the market in that way. Okay, most of us will approach the market in the way that we've all learned. Okay, most of the textbooks teach. Okay, most of the other trading rooms will teach. But we don't want to be the same as the majority, because 95% of the majority lose. And so we don't want to be the same. Okay, so the thing is, why keep doing what everybody else is doing? Okay, when the majority is losing. Now everybody else is using stops. Now stops are not something that's difficult to work out. I mean, your trading platform puts it in automatically. But the problem with stops is, it's an order that's resting in the market. People know where they are, okay, especially the professionals. So they were, we actually know, for example, on the S&P, most people use, 6 to 8 tick stops, okay? The more the scalpers use 4 tick stops. We know where they're going to get triggered as well. Yeah, so there you go, Joe. Yeah, most people will stay in until your stop is getting hit, because, you will sometimes have that happen, where the market will move a few ticks against you and then move back in your favor. But however, if your execution is good, the market should move pretty much in your favor straight away. And if you just execute this over the next few weeks, you guys will see what I mean. It pretty much works most of the time. Okay, guys, I want to get to the playback, so I don't want to spend too much time here. Okay, but this is an example on crude oil. Okay, so a more faster market. Now here we see 63 buyers lift the offer, 3 ticks off the lows. There's a delta divergence. We see the green arrow, so more positive delta here as well. That might actually trigger off a little bit later on in that footprint, but let's just go with this for argument's sake. Now we see 14 lift the offer over 7. That's just above the high volume mode, so that's good to get in. Or we can see 26 lift the offer here over 2. Now we might get in here. Okay. Now, what you notice is the market, comes off quite nicely. Here, when you see 16 hit the bid, and it comes back to the high volume. Now, in this case, what you'll notice is now you might take a little bit of heat, only one tick, okay, against your stop. Okay, sorry, against your entry. Now, two hit the bid, two hit the bid. Now, I'm not really concerned if two hit the bid. Now, had that been 20 hit the bid, okay, then it's a different story. So, does that make sense? But if two hit the bid and I'm in that trade, now some people say, why don't you just use a 3 or 4 tick stop if you're going to get out for 3 or 4 ticks anyway? Because the thing is you can't really do that. You can't be that rigid with how you manage a trade. You can't. Okay, the 3 or 4 tick stops that are always there are going to get hit. Okay, but if you allow for the market to fluctuate 3 or 4 ticks against you, you're left. Sometimes it will go 3 ticks against you, and you can actually get out a break even. I found that from my own experience. You guys just have to trust me here, okay? You guys that have been in the room for a while and experienced this for yourself, you just have to experience it for yourself and actually try it out for yourself. Try it on for yourself, and then you'll understand what I mean. And you'll see it. A lot of you guys will actually see, okay, the market might move 5 ticks against you, but you're long, okay? But the market attracts more buying, okay? And so there's no reason why, if the market is moving 3 or 4 ticks against you, but each time it moves a tick lower, it's attracting more buying, why you should get out. Okay? But sometimes that market might attract more selling, and you're long. Okay, and then that's when you need to get out. So it depends on what the market is. So it's not price alone that determines when you should get in. It's what order flow is doing as that market comes back to your stop and as you go offside. When I say offside, meaning you go into negative territory, so adverse excursion. When I say onside, when the market goes in your favor after your entry. Now, what you should be looking for is obviously the trade going in your favor pretty much straight away. Most of the times, I'm pretty aggressive with my exit. I will get in and out 3 or 4 times if I have to on the same trade until I actually get the trade and it comes off in my favor pretty much straight away. Now, I mean, here you can see here there's a example here, 16 buyers at the highest. But now the reason why would you exit? Because that high volume node just shifted. Okay, would have been here around 75. It moved to the highs. Now, anytime we see the high volume node move 1 or 2 ticks off the highs, we know the buyers might be getting trapped. Okay, so that would be an idea that sellers might start hitting the bids below that level now. So you could take something here. Okay, for example, you get in here. That's I can't even see what price it is, but let's just say 74.56s. Now let's just say that was. Let's just say that was 50s and that was 59s. Okay, say for example your target was 10 ticks and you didn't get filled. Now, if you see that, okay, you can just take your 9 ticks. Okay, or if you don't see it in time, okay, it doesn't matter. If you can see something like this, 43 hit the bid over 0, okay, now you can get out here. So time to cover some profits. Okay, negative delta coming in. Okay, we've seen the high volume node trapped at the highs there. So if you can see buyers got trapped and you're one of the, you're in that position and you're long as well, get out. Okay, or at least take some profits and move your stop to break even. Now, what I would have done, okay, is move my stop to break even here, then hold the rest. In this case, you would have just taken some profits, move your stop to break even, and then it went off again. Okay, but otherwise, if you, for example, you got out, okay, completely, you could always get back in again here when 39 lift the offer, and then buy start lifting the offer above it, just here at the 05s, 06s. Okay, just around here. Does that make sense? So be prepared to get out and get back in again. Okay, you'll do much better at risk management than your stop will ever do if you get good at it. Right, so now the next thing is this is an example where we get short on crude oil. Now here, what we've got is an example where 51 buyers got trapped at the highs. We might enter here, 43 hit the bid over 13, okay, or 40 and hit the bid over 4. Now you're not always going to get in there, but just giving you some ideas here, okay? It's not absolutely exact examples, okay? We're just giving you an idea. Now, what we might do is see a delta divergence, for example, here. If we see delta change here, that's okay. You're always going to find that counter to a move, okay? But it's a heads up that, buyers might be coming in here. So what we see here is that, delta is now positive, okay? And we see 42 lift the off over 28. Now, you might take some profit there, okay? If you don't take it there, that's okay. You'll always have these little movements, okay? So at least reduce your risk, okay, by then. Move your stop to entry. Because if you can see if you're weighted, there's no problem getting back to your entry price here, okay? Or take some profits here when you see 12 lift the offer over 3. Why would you take it there? Look at the high volume node. It's 1 tick off the low. So buyers are leaning on that and lifting the offers above it. That's actually good for long. So actually, scalpers are getting long here. They're coming back to your exit, okay? So if you can understand, these are just scalpers probably doing this kind of movement, okay? But, we need to know that they're coming back towards our profit target, okay, or our entry, sorry. We need to get out, right? Does that make sense, guys? So these are some of the things you look at. Now, this is another thing, okay? Good for a short here, 34 buys here, okay? High volume node, one tick off the high. Then we hit the bids here, 23 hit the bid, okay? Good for a short. And we might miss that. That comes off very quickly, low volume. And then 16 hit the bid 03. That's good again. Look at that high volume node, one tick off the high. And then we can get short again below that. But notice here, the high volume node moves one or two ticks off this low, and then we can't move any lower. Sellers get cut off. And all of a sudden, okay, buyers start lifting the offer. So that's good to cover. So don't wait for that. At least move your stock to break even, because that is pretty much likely to come back at least to your break-in level, okay, or worse, probably against you into your stop. Okay, so it makes sense to take a little bit of profit or at least reduce risk. So you don't have to exit the trade completely, but sometimes you have to take profits ahead of your first profit target. Sometimes you have to move your stock to break even, okay, you know, a little bit sooner as well, purely based upon what's unfolding in real time. Yep. Now, guys, I'm going to now do a market playback. So just give me a few minutes. I'm just going to turn off the mic. Okay, and then I'm going to go through a couple of techniques. Actually, I'll go through the techniques first. It's probably a better thing to do. Right, guys, what I've done is I've come up with a couple of techniques that you guys can take away and use straight away. Okay, now this is the L2ST technique for unbeatable discipline and commitment. It's very simple. Okay, what you need to do is use something such as the meditation we did earlier, okay, at the beginning of the day. If you guys that missed it, okay, we'll do some meditations in the trading room, okay, we'll do one on Monday, first thing, guys, to just help clear the mind. So you guys, if you're new to meditation, it's something that you might want to get into, okay, but most importantly, what you've got to do before you trade any strategy, any methodology, okay, before you can be able to tap into the power of the unconscious mind, you need to firstly be able to silence that mind, okay? You need to clear the mind of any inner thoughts, any inner voices, okay, those inner demons or whatever you want to call them, okay, that monkey mind, okay, those emotions, okay? You need to silence the mind, get rid of those feelings and sensations that bring about the emotions. You need to just sort of observe them, really, to get rid of them. You don't need to fight them, okay? You need to be aware that they're there. Okay, so if they're there, just observe them. What happens with negative thoughts and negative emotions is that they disappear once you watch them. Does everybody understand that, right? Once you watch them, they no longer are negative, okay, because you realize that you're no longer identified with them, okay, because you're watching it. It's almost like, you know, you're watching another person. If you're watching another person, you know that's not you. So it's like if you watch fear, okay, in the mind's eye, you watch the feeling of fear, or you watch the thought that brings about fear, or you listen to the voice that brings about fear or anxiety. When you listen to it, you've already disassociated yourself from the emotion. Does that make sense, guys? Because you're now the observer. So it's a very powerful technique. So straight away, just by doing that. Second step, what you need to do is hold the vision of what you need to do. You need to do this in every single trade, guys. Okay, hold the vision of what you need to do, okay? What you need to see, okay, in the mind's eye. So this is where you get the vision, okay? Through the commitment, you get the vision, okay? Now, you need to hold the vision of what you need to see in order to react and execute the trade, okay, pretty much unconsciously or automatically. Or if you're already in a trade, exit the trade if you're already in it, okay? Now, one of the things you want to do is, as you hold that vision, on the next page, I've got a little metaphor that will help you hold that vision. But if you just imagine your unconscious mind as sort of a screen, okay, and your thoughts that take place, okay, are a projection, okay, that takes place. So if you think of, you know, your mind as a projector, okay, all the thoughts that come through your mind, okay, on the mind's eye, actually project themselves onto the subconscious. Does that make sense? Anybody confused by that? Okay, but just a metaphor there. Okay, so if, you know, think of it as, you know, if you want to think about, you know, visualize maybe like a cinema screen, or okay, you're in the theater or something. Okay, just visualize, you know, that you can see your thoughts, your emotions, okay, or you can see your vision, okay, on the screen, okay, within the cinema, okay, of where you sit. Okay, so think of your unconscious or subconscious mind as this screen, okay, where you hold a vision. Does that make sense? And that vision and intentions needs to stay there in the subconscious mind before you even pull the trigger, and stay there, okay, as in a way it's like reference material, okay, for you whilst you're looking to pull the trigger. Does everybody get that? So hold the vision on the screen of the subconscious mind. Okay, so it's basically like a visualization. You visualize it. You know, everyone should be able to close their eyes, okay, and see a vision. Okay, if you think about something, okay, you'll have an image associated with it, right? If you think about, even if you think about to today, okay, when you took, maybe you took some good trades, okay, maybe you took some bad trades. If you hold a vision of it, you can see it. Okay, now if you close your, you just look around the room. If you think you can't hold a vision, just look at the room around you right now. Okay, take a snapshot, understand what's there, close your eyes. You know, you pretty much remember what was there, right? So how do everybody has visualization. Everybody is able to hold a vision. Okay, so that's what you need to do with a trade, but you need to hold a vision, okay, of an experience that you're about to experience that you haven't experienced yet. So you're holding a vision of a future result, okay? Now, what you've got to do, okay, is simply repeat this, okay? So language is very important, okay? You need to say to yourself, okay? Now, one of the main things that takes most people away from their trading, okay, is their inner voice, okay? What I call the monkey mind. Okay, it's almost like there's an inner demon. It's almost as if you're possessed by something, which is always saying, you know, there's part of you saying, I'm going to make some money, I'm going to do well, I'm going to take my trade. And there's a part of you saying, no, you're not, you're crap. You know, you're shit at trading. You don't know what the hell you're doing. Okay, you know, who has ever experienced this inner voice that's always against what they're trying to achieve? Okay, you know, what is, who's ever experienced that? Thanks, Eva West. Yeah, we are unique, absolutely. Yeah, everybody, okay? I mean, I've had it myself, so that's how I know it's here. I mean, I don't read about this. I've not learned this anywhere. All I had to do, I use a simple process, okay, of mastery called self-inquiry, okay? Something that I've sort of picked up myself, you know? I thought, okay, look, if it's me that experiences this, okay, it's me that can deal with this. Simply by making that declaration to myself. That's how I deal with most of my issues, not only in terms of emotions, in my trading, and everything. Okay, everything in life. That's how I deal with life in general. Okay, so that's how I approach things. So I say to myself, look, if it's me that's experiencing this, and now the way I look at things, okay, and you guys might want to use this metaphor as well, okay, everything that happens outside of you, firstly, has to happen inside of you. Does that make sense? Now, everything I know, now you have to really learn to understand this, okay? Now, when I first sort of thought, I didn't really understand it personally myself until I actually made it my own experience. Now, what I do is, what I understand is that what happens around me is always a reflection of how I'm being and how I'm thinking and how I am being. Now, I believe in everything is connected in some way, and everything is energy, right? So now, whether you hold that belief or not, it doesn't really matter. Okay, it's basically, it's just the way things are. Okay, so now if I know that what I am seeing, now just try this on for a moment. Even what you're listening to right now, you're listening to this presentation, you're hearing this presentation right now. For a moment, just change your attention to not what's outside of you, but just, if you maybe just close your eyes for a minute, and just realize that all of these sounds that you're hearing, and even me speaking right now, just close your eyes right now, okay? Although you think you might be hearing it through your ears, okay? If you notice, the sound is actually coming from within you. It's not even coming from your ears, okay? I don't know if you guys will ever, you'll be able to experience that, okay? But if you can't, don't worry about it. But if you can actually listen to the voice and actually feel that, wait a minute, I can actually hear this within me, okay? Now, it's also like with the inner voice. Now, you're not going to hear that through your ears, are you? It's not coming through your sensory experience. It's there, but you can hear it. It even has a tone. It even has an accent, okay? Now, one of the things you can do with your inner voice, if it's really negative, okay, is make it sound like Mickey Mouse or some sort of cartoon character. Okay, that always helps, okay? Then you don't take it as seriously, okay? So reframe the way you listen to that voice, okay? So, you know, my inner voice didn't really like it when I turned it into Mickey Mouse, so it stopped bothering me, okay, as much. Now, it's still there. You don't get rid of it completely, okay, but you stop bothering it. Now, I got this stuff all through NLP. Now, today's not an NLP presentation, but it's very important. Everything I do, I always bring in the psychology. So I can get very deep when it gets down to psychology, you know, especially on the energy level, okay, which is not even about thoughts, okay, or not even about the mind. It's way beyond the mind. Now, what we got to talk about here now is the inner voice. You need to sort of make that work for you, Okay, so what you got to do is occupy it. Now, there's only one inner voice. Now, you don't usually have two. Okay, so if that one inner voice is there, and you can take control of it by giving itself what I call giving it something to repeat, like what I call a mantra. Okay, what you do is basically on this subconscious mind, you basically hold the vision of what you want to achieve, and then all you say to yourself is, "I know what I need to see. I know what I need to see." You can even say this out loudly to start off with, and then what happens is the conscious habits become unconscious habits anyway, and then you start doing this unconsciously. You keep saying to yourself, "I know what I need to see. I know what I need to see." So you don't need to say to yourself, "I think I know what I need to see. I'm not quite sure, but maybe I am seeing it right now." You just say to yourself, "I know what I need to see." Okay, and you're holding the vision in your mind's eye, so you already know what the picture's supposed to be look like, and you already know what you've got to experience in reality. Okay, so all you've got to say to yourself is, "I know what I need to see because it's there in my subconscious mind. That's my vision." Right? So just try it out, okay? And then all you do is step 4, okay, of this process is you keep repeating that, okay? And you keep your focus and attention on the screen of your subconscious mind. Keep knowing that you respond automatically and pull the trigger, okay? And again, as we talked about earlier, you have to learn how to trust the unconscious mind to do this. So what you got to do is keep knowing that you'll respond automatically. And I always talk about automatic responses to these footprint setups and these execution setups. With experience, it does become an unconscious habit. It becomes an unconscious experience. It becomes an unconscious action that you take, pulling the trigger once you see it. But you have to first, you know what you need to see, and you need to say to yourself, you know what you need to see. Does that make sense, guys? Does that make sense? Let's move on. Okay. So next step. This is just a quick little metaphor, and we're going to then go through the process. Yep. So we're going to use screen time and playback. Playback at the end of the day really helps, and I'm going to do a little playback in a minute. Okay, so this is a quick visualization metaphor. Okay, I mean say that's you. Okay, I don't actually know who this guy is. I found him on Google Images, but let's just say it's you. Okay, and he's looking at the charts. Okay, that's you. What you need to do as you're looking at the charts, this is the best way I could think about this. Now I had to say to myself, now how do I hold my vision? Now, when I looked at this and I asked myself the question, I closed my eyes and I found that I had a screen. Okay, what I call the screen of the subconscious mind. Now, I actually can see what I need to see before it's happened on my charts. So now, it's not happened on my charts, but I can see that it's happened on the subconscious mind. So that's my vision. Now, what I need to do is now see that vision through to reality. Now, what I need to do is hold that vision and know what I need to see and experience, but I need to trade between that moment where I am right now and where I want to be. Does that make sense, guys? That's all it is, holding the vision. Well, guys, okay, now just give me a few minutes. I'm going to bring up market delta. Just got to load it up and wait for the charts to load up. And that's pretty much the end of this presentation. Now we're going to go for playback and draw this in even more. Just share the charts. Okay, so we'll just start from a little bit earlier on today on crude oil. I just got to share the charts here. Let me just give this a sec. Each second plays back. Make that a little bit less. Screen 2 of the monitor. Sorry guys, it's going a bit longer, but it shouldn't take too long now, pretty sure. So you guys should be able to see the screens now, right? Yep, you can see them now. Cool. Right, let's just go through this slowly. Okay, so I will pause this at times. Just move my mic down so I can sit here and watch this at the back playback. So maybe I want to move this forward a little bit to a time where we have a little bit more volume on crude oil. It's playing out quite slowly at the moment, so let me just speed this up. We didn't have much volume at this time. It just looks like we're just getting a little bit of a bounce here, so that looks like the seller's just taking over again. Okay, just taking it back towards VWAP here. But notice the buyers got trapped here at 14s. Okay, so 33 buys if the sellers start hitting the bids. Okay, but we're just not in an area where we want to be looking to do anything at the moment, so let's just keep moving. Okay, let's maybe see if we can get down, because we're around the VWAP. So have a look at, we've got to look at the setups that we always look at, guys. Okay, so what I'll do is just delete all the drawing tools on here, so we don't have any of these markings. So it just clears up the chart a little bit. So we should see the continuation of towards downside. The good thing is with the playback, you can also play back the time and sale as well. So this is a brilliant tool. If you guys haven't used the playback before, it's a brilliant facility in Market Delta. If you guys, not around during the day and you want to see what happened, you want to practice execution, best thing to do is you can actually use a simulator, I believe, within Market Delta as well to get used to this as well. So around the VWAP at the moment, we can see sellers hit the bid. So look at that, 36 sellers hit the bid. Okay, we're just coming back up to that level again now. Okay, you see that buying just got cut off again at 74.10s. Okay, so generally watch the time sales here. It's not an area where we want to do too much business because we're around the VWAP, so we want to just wait for us to move away from the VWAP. So in this case, what we do is just wait until we can maybe get to an area where we actually want to take a trade. Okay, so we have to understand that we need to take trades and read order flow when we're looking to take a trade. Maybe I'll speed this up a little bit. Maybe, okay, here we are. Look at this 26 buyers just got caught up here. Then 27 hit the bid. Look at all these zeros on the offer. So that's good for rejection. Now, you might be able to pick that up quickly. Notice how quickly that rejected. And then we had to come back into that area. Notice that high volume node held, and then we continue downside. But notice that high volume node is one tick off the high. So that's all good. Look at all the selling coming back in now. Okay, now we're below value. Okay, look at where we are below value now. Okay, now what we want to do, okay, firstly, the seller's hitting the bids here. Okay, the seller's hitting the bid. Okay, we're below value. Now, this is actually, I believe this is the long that I took because this is the 1272 extension. I believe this is the one. It was around this time. Okay, and I remember all of these sellers getting caught here. Can you guys see this, right? Okay, all these sellers here. Look at all this. This is all selling here. Okay, but look at the delta change. Okay, it's a little bit positive. Okay, the delta change is basically just, if you look at the delta for each bar, that's here in this row, negative delta, that means there's net selling in each one of these footprints. Okay, it's basically looking at the bid volume, all the volume on the bid, all the volume on the offer. Is everybody okay with that? Yeah. So what we do is we're below value, so we need to firstly look at what's setting up here. Okay, what do we see? Okay, so one of the things we want to look at is, for example, this divergence here. There's a divergence here, but at the moment there's still quite a lot of selling here. Quite a lot of selling. Okay, so let's just maybe play this back really slowly now. Okay, every couple of seconds. Let's have a look at this setup. Okay. 74.76s. Do you guys see that? 31 lift the offer there at 74.76s. You guys just see that? You see that firstly there's all these sellers here, but they just that negative dollar was there. But what you want to watch is this high volume. There's 3 ticks off the lows. Okay, so let me just, I don't know if I can go back to that, but if you just see that, it was very quick. Okay, I'll try to play it back a few seconds at a time so we can do it a little bit more slowly. But if you can see, there was 31 lift the offer over 11. Okay, so as soon as you see that, okay, you should be able to get in. Can I zoom in a little bit? I don't think I can actually, unless I do this. Let's maybe look at the smaller time frame and just do it like this. So we do it like this. Yeah. Okay, so I mean that's basically, let's just say 73.76 was our entry. Okay, now that was good. I mean, just notice here that's coming in the first standard deviation low. Okay, but if you miss something like that, it's okay. You can always wait. Okay, we might even come back again. Okay, back to this level. If we come back to like 30, sort of 73s or so, that's okay. You look for it. But I remember this came off very quickly when I got into this. Okay, there we go. Well, the target is our VWAP. There you go. So remember, our visualization is for this move to come into the VWAP, 75.4. So that's our target. Okay, you can see straight away off that. Okay, the playback was very fast, right? I mean, I could try and do it a little bit slower. Yeah, but we've got some more examples. We'll do some more examples. Let's look at the next. Let's maybe look. Let's just keep moving. Okay, let's keep letting it unfold. And when we see maybe something will set up, then I'll slow it down. Okay, I can't even remember what happened today, but let's just slow it down. Okay, I remember we had a bit of a sideways day, and then some sellers above value, buys below value. I can't remember exactly. I can't remember exactly what second of the day, you know, what happened or what. So I'm just playing this back and trying to pick it up in real time. Okay. So where are we right now? Okay, so next thing we might want to do is maybe look for a short, you know, above value, okay, around that level. Now, next thing we also look, I mean, if this is not unfolding right now, I would probably look at this sort of high right here as well. You can see, last time we ran around, we bounced into the 17s. You guys see that? So first thing I'll be looking at, okay, where's the next point where sellers might enter the market? Okay, so this is the VWAP. So I'll watch this firstly. Okay, see if anything's setting up here. But otherwise, if we get through the VWAP, I know I might be looking for sellers here. Ideally, I do want to see the price get up here, okay, above value. However, I know if it doesn't, we might find sellers here again. We do need to look for that and be prepared on crude oil, markets like that. You know, be prepared. You know, if you're going to trade within value, just be prepared to do that, okay? Just look at where the sellers were the first time around. So, I mean, I'm going to look here. We might just break through that, okay? And if we break through the 17, so I'm going to look at 04s firstly, see if we have one of those sell set up. If we don't have it here, then there's nothing for us to move back down to value. However, we might see someone at 17s or 30s. Okay? Right, guys? Okay. So, next thing, we're going to first look for a short at 17s, and then we're going to look for a short around 30s. So we already know we're expecting sellers, okay, but we don't know where we're going to find them. So we have to read the order flow. Okay, so let's just play this back. Let's maybe play back every few seconds. So this is quite slow now. There's a bit of selling here, but no footprint seller. Look where that high volume note is 74. So time sales is okay, but you know the buyers are actually lifting the offers above 74, so that's no good. Okay, that high volume note needs to be at like 03s, and then the seller's hitting below it. Okay, that's a bit slow. So let me just speed it up a little bit. Okay, there we are. High volume nodes there. Now we're lifting the offers. We're lifting the offers. Okay, that's moving quite quickly. Right, okay. Let's just slow this down, guys. Let's just slow this down. Maybe we can play it back. Okay, we're now at this resistance. Now let's do this one slowly, right? Let's do this one slowly. We're now at this resistance, right? We're now at this resistance. So we know we want a short around this level because we should expect sellers, right? So first of all, we might blast through it and come all the way to 30s. But let's just have a look, see if we can get a short here. Okay, I can't remember what happened. It just moved so quick, this market, it's impossible. Right, let's just play this back. I'm going to play about 1 second, okay, for each second. So market was unfolding like this. First of all, okay, look, sellers hitting the bids at 15s here. Okay, sellers are starting to hit the bids just below it. However, at this current moment in time, okay, I'm just watching the time of sales. There's ones and twos coming in. That'd be very aggressive to short that. Just after the directional move like this, don't just pick up a little short like this. This 3 ticks off the high. Now, if that was 2 ticks off the high, much better. But otherwise, just be careful right now. Okay, although the sellers, if you don't understand it well enough, you'll probably get, right, okay, 3 ticks off the highs, then just get short. You can't just do that. You have to wait for time of sales order flow. Let's just play this back slowly. So I'm going to still watch out around that 17, sort of 15. So this is where you've got to sort of visualize and say to yourself, okay, I'm looking to get short 17s, 15s. I'm looking to get short 17s, 15s. Okay, that's what you're going to be saying to yourself, right? So, you know, we know it might be a short-lived move. It might be good for a scalp, or because we know we're not above value, so we might not have as big a move, but it'd be good for a scalp. So that's what we're looking at. So let's just play it back. I mean, that's actually looking good there. 74.15s. Okay, you can see that the sellers are starting to hit the bids there now. Okay, that's it. Okay, now look. I'm just going to pause this now. Okay, look at this. 100 hit the bid over 39. So even from the previous footprint, we know we should be getting short around the 15s or 17s. So what I would do in this case, I would wait to see if we can test the 15s. And as soon as we test it, look at the time of sales now as we unfold it. Let's see if we get anything. Okay, as we test it, do the sellers hit the bids at the 15s again? If they do, my finger already now would be on the trigger, right? Ready to pull the trigger around the 7th. If I can get higher, that's okay. But ideally, I want to get around the 15s, right? So what I'll do is play back. Now, watch the time of sales and what the footprints. Buyers are now getting caught up here. 14 here, 17. 30 hit the bid at 16s. 30 hit the bid at 16s. Okay, so on that, I would just pull the trigger. Okay, pull the trigger right there, 15s or 16s. Okay. So let's see how that unfolds. There you go. Starts moving in favor. Sellers are still hitting the bids. The red time and sales coming off quite nicely, coming at 11. So let's just say we're going to take 10 ticks. So let's just notice what's just happening there. Sellers are starting to hit the bid. So that's, let's just say we're short from 16. Okay, that's where we'll hit the bid. Okay, so we're in. Okay, now we're 6 ticks already in our favor. Okay, now we've got to watch this unfold. Sellers are still hitting the bids. Okay, 2s hit the bid. Okay, looking okay. And there's a bit of buying coming in, but it's very small. One lot. Everybody following me so far? Now, the other thing is also, just look at what's happening here on the volume breakdown events. We've got a divergence at this high. Okay, so that was it. So I had a heads up from this footprint at 13.49. Now, I could short between sort of 17s and 15s there. But I already had an idea of where I want to get short. Yep. Now, be prepared in this case, okay, to cover at least 10 ticks. So if you're 16s, cover at 06s. Okay, so that's also the VWAP. So in this place, what I would know is I want to cover at 06s and move my stop to break even. Okay, so that's what I would do. So let's see what happens. So at the moment, we don't know if this is going to go to 06s. It might not even do that, but let's just have a look. Still sellers hitting the bids. It's unfolding okay. Still hitting the bid, still hitting the bid, still hitting the bid. All red coming in, so it's okay. No relaxed trading. We're good. We're good. There we go. 06. Okay, we hit 06. Okay, if you didn't get filled there, let's see what happens. Okay, it comes back a little bit. Still not right to entry. But sellers are still hitting the bids again. If I didn't get filled at 06s, I mean, I could make the decision at that point in time to move it up a couple of ticks. Okay, it depends on how quickly it happens. Okay, but by this time right now, if I can see 06s didn't get hit, I would definitely move my stop to break even or try and get it out something here. Okay, but the buyers have got trapped here at 14s now. Maybe they want to come back into 06s. We still haven't tested the VWAP exactly, so let's see what happens. Still okay. See some buyers lifting the offers at 14s. Okay, but out by then, the stop needs to definitely be at break even. So just watch what's happened here. This move come down. It may, just say, for example, you didn't get filled at 06s. Okay, what would you do? Okay, what would you do? Firstly, what I would do is if I got down one tick and I missed it and that rejected that quickly with a delta change that's a little bit positive like that, I would probably try and get out around 08. So even though I had a 10 tick target, I'll probably get out. Okay, but let's just see what happens. Let's just at least definitely move my stop to break even. If I want to hold my 10 tick profit target, I will wait. Okay, so let's see how it unfolds. Remember, we're only at a minor resistance here, so it's just a scalp. Okay, so best place for us to be getting short. Already we know where we're looking for sellers. Okay, which is going to be around 29s. Okay, you know, around the 29s. Okay, or sorry, 30s here. Okay, 30s here. So 74, 30s, around that level. Okay, around that level. I'll just say 29s because it's just sort of short of that 30. Okay, there we are. The market continues higher. So that's good for a little scalp. Okay, so let's see what happens now. So next target we're going to be looking at. Okay, let's see if we can find an entry at maybe this level. Okay, 74.30. So we've got to wait now for the market to come to us. Does that make sense? So there's no real resistance in the way now. If you look to the left, there's nothing really there. Okay, so we need to wait. So let's just unfold this, maybe see if we can get to above value. I can't even remember if we got there, but I think we did at some point because this is the long that I took, and I remember coming towards the value high here somewhere. So let's just unfold it a little bit more quickly. Remember, the pit traded session opens up after 2 o'clock, so that's where you're going to get someone trade. I think that's where we actually had something earlier on, but let's just have a look. Okay, I can't remember exactly. It's probably better if we don't remember. Okay, so we can make it a little bit more realistic. Okay, so we're just waiting patiently, wait for the market to get to us, waiting patiently, waiting patiently. This actually comes off a little bit more. You could have taken another short here. Okay, but let's see if we can get maybe a better area to trade. We don't want to make bad habits here. So although I looked at this, I'm looking for a scalp off it. It actually could have taken another short here. But let's just see if we can get maybe something else here. Okay, it's already coming off here. Okay, unfolding. We haven't got to above value, so we could have got short again there. Okay, there was that. Let me just unfold. Let me just maybe go back that level there, and let's just keep going with it. Let's just say we missed it. Let's just pretend we missed it. Let's make it more realistic. Let's just pretend we missed it. Okay. So we're coming up. Maybe we can test this level again, 17s. I suppose if we're testing that level, we keep finding sellers, we could look to get short here again. And we see 74 hit the bid at 74.12. That's good. Okay, good for a scalp, but I think be careful right now because we haven't quite tested that 17. So I would wait in this case. I'll wait for it to get above value. Okay, personally, that's what I would do. Okay, now we're here. Now we're here. Okay. Firstly, what we got to do? Okay, there's 347 buys here. 347 buys. Firstly, we've already got that level. Look at what's happened already in price action. 74.30s. I'll just mark that up. Okay, that's sort of above our value at high. Okay, we're looking for sellers here. There's a slightly the volume breakdown started to book. Let's just pause there. It's going to be unfolding very quickly. Okay, so let's just do this maybe 1 second at a time now. Okay, 347 buys. That's a lot of buys. Now let's see what we're going to watch. First thing I'll be watching is 74.29s. Okay, what I want to do, okay, is watch that, see if the buyers get trapped. Okay, so what I do is I want to see those buyers getting trapped. So already I see loads of buyers there. I'm thinking, that's where I'm licking my lips, thinking I want to get short around 28s, okay, 27s, okay, around that level. Okay, so that's already my thinking. That's my visualization. It's already in the mind's eye. I want to see sellers hitting the bid below that. Okay, does that make sense? So let's do that. So already 385 buys. I'm looking at buyers there, but I'm looking at buys. We can look at it. Look at that 10 lot hit the bid at 74.28. More aggressive trader, 74.28 will probably just get in here. Okay, I think that's good. I think that's fine. Okay, there's nothing wrong with that. Okay, but let's just wait. There we are. See that 10 lot hit the bid, and then a 9 lot hit the bids, 8 lot hit the bids. That's coming off right there, off this alone, 395 buys. You're already off. You're already on side. If you just pick that up and pull your trigger at 28, you're already almost hit your 10 tick target. You guys see what I mean? So sometimes being aggressive pays off. Look at this, 12 lot hit the bid now at 20s. Okay, so that's good size. 10 lots or more, 74, 21 here. You see a 9 lot hit the bid. Okay, 12 lot hit the bid. So there's definitely some follow through. So, you know, getting short there and watching that unfold like that was a good thing to do. I mean, I would just see that 395 and I just think, okay, I'm going to get short as soon as I see a 10 lot or more hit the bid on the time sales. Does that make sense, guys? So I'll be happy, even if I couldn't get 28s, I'll be happy to get the 27s. I'll be happy with that. Okay, so now let's see what happens now. Okay, so if we got a short here, what's our target? Our target will be 74.05s. Okay, 74.05s. Now, be prepared just in case the selling gets cut off very quickly. So what I'll be looking for is reasons maybe to get profits off maybe sooner. Just in case, maybe look at this 34 exponential moving average here. Remember this 74.17 was previously resistance. It might now be support. So we might actually find buyers coming back in here. So I want to make sure I want to get off something. Just in case, I might have a 10 tick first profit target. But I'll probably just take something off here because I can see some buyers coming in here already, 74.21s. So I'll probably say, okay, let me just move my stop to break even at 28s again. Okay, and just get off something at 20s. Okay, so only 8 ticks, but it's not $80 per contract. Okay, so let's just see what unfolds. Okay, so I mean, if we get stopped out, we can always get in again, right? We can always get in again. So if I take 8 ticks, for example, here, okay, and move my stop to break even, let's see what happens. Okay, we're looking for this market to come to 74.05. That's our target. Okay, or yeah, it should actually your target should be 74.06s, just a couple of ticks above that. Okay, or one tick above is good. Now the good thing is we've got divergence here. Okay, if you look at the volume breakdown, we've got divergence here as well. This is clearly moving lower. Okay, and then we had a slightly higher high there, so that's good. So let's unfold. Here, this is where I would cover. Okay, this is definitely where you should have covered 10 ticks, stop it, or at least profit taken. Okay, I mean that was okay, 21s. Okay, but I think this is a much better place. Use that high volume node is right off the lows. So that's a sign the buyers are about to start lifting the offers. Did you see that high volume node right off the lows there, 16s? Okay, I can't really rewind. That's the only problem with this, unless I go right back to the beginning. So what I have to do is stop it at the right time. You can see what happened is there, 16s, only 4 hit the bid, 11s lift the offer at the lows. That is definitely a reason to take some profits and get to no risk. You guys see that? So that's how you're managing the trade based upon order flow. Does everybody see that, right? Important to get this. Now let's keep going. So if you haven't taken some profits, definitely take some profits there. You should have got filled with a 10 tick profit target anyway if you got the 8s or 17s anyway. So, but we're looking for the VWAP still, the next target. Let's see if we can get to 74.06. Now we're at no risk, so it doesn't really matter. Okay, we're taking 10 ticks off, doesn't matter. Okay, so now we're looking to see whether these buyers might want to bring it back up to 27s or 28s, just to maybe look for some more sellers because that's where we found them. So let's see if they do that. They might do it, they might not. Quite a little buying coming in here, so I'll be happy to take something off there. Okay, we do continue. Okay, oh, this happened quite quickly there now. Right, okay, we are bouncing back up. Okay, look at all this buying. Look at this delta divergence. Definitely a reason to take profits if you haven't already hit your profit target. Now, what I'm seeing is now this divergence. Okay, you've got to watch this as it's unfolding in real time. So I mean, we've got a couple of good scalps so far. That's all. We haven't had a big trade at all. So one thing we've got to do is maybe watch a volume breakdown here as well. Okay. So one thing that I'd be looking for, where do we see the sellers? 28s, 27s, right? So you already got that price in mind. So what I'd be thinking is on the screen of my subconscious mind, it'll be, I want to get short 28s, 27s again if I see a footprint set up there again. Because that means we're going to come back all the way to value and we're looking for more sellers around the same price. Does that make sense? So that will be what you need to go through that needs to be going through your mind. Yeah, that needs to be your way of thinking. So here we are. Okay, we're there. Okay, we're there. Now let's unfold this slowly. Okay. Now look, 28 buyers already got stuck there. Okay. Now I would be happy. I would short this. Okay. I would short this 25 here. 15 hit the bid. Okay. I would short that 15 over 9 because I just see a 10 lot hit the bid at 27 as well just now. Okay. So I'll be happy with that. I'll be happy to just get in there. Okay. The buyers are getting trapped here. Okay. 39 buyers there. Sellers hitting the bid. I'll be happy to get in. 27s, 25s is all good. But I'll watch this unfold. Still some more buying coming back in again. It's a little bit more buying than I would like. Watch this 27. That 27 seems to be holding. That 27 seems to be holding. Now, watch that 27 as it's unfolding here. 10 hit the lot. 10 sellers keep hitting the bid at 10s. Sorry, at 27s. Can you see that? Now, the other thing we see is the divergence now on the volume breakdown. This is one thing that I wanted to look at. Okay, lower high on the volume breakdown. So as I'm watching that, I'm thinking, okay, I'm short now. I mean, if you're not, you might not be that quick. You might not just say, oh, I'm going to get the 25s or 30s. You wait for this to unfold a little bit. Maybe you just missed that. That was quite quick. Okay, probably able to get in that quickly as it's forming anyway. So what we do is just watch this now. Okay, for the next few minutes. Okay, for a few seconds. Okay, we know we want to short around 27s. Watch the time on setups. Okay, we want to see a flood of selling. Okay, and a big lot, at least 7, 8, or 10 lot. Okay, hit the bids. Ideally over 10 lot, hit the bids. Okay, ideally sort of below 27s and 26 to 25s. Okay, around that level. And whenever we see that, it might not even be in this footprint. It might be in the next footprint. That's what I need to look for that now. Look at this. I mean, the buyers aren't really lifting the offers at 27. So this is sort of, there's a one lot lift the offer. Sellers are still hitting the bids there. Okay, it's a little bit balanced right now. sometimes if you get in a little bit prematurely, say for example you got in at 25, and you think, oh wait a minute, the buyers might still want to take this a little bit higher. I might want to get out, okay, and then get back in again when it looks a little bit better. You can always do that, okay. I do that sometimes. But we have got a divergence. Some folding. I mean, I think that's looking okay there. Okay, but the only concern I've got is now they keep hitting the 28s and someone keeps lifting the offer there. It's the only concern I've got there. Okay, but more aggressively, there you go, sellers are hitting the bids again. 5s, 8 lot hit the bid. There you go. You just see, guys, see that very quickly. But, you know, if you're holding the short ready from 25s, it's okay. There wasn't much heat to take. Maybe move to get you a couple of ticks. So now in my case, say, for example, I got short 25, so I'd be happy to take 15s. There we are. First target filled. Okay, stop at break even now. So straight here, as soon as I hit the 15s, my stop will be at break even. Does that make sense? Now, what's happening again? I took the same trade here earlier, okay, but I've just taken it again, okay, above value. So this is why I say take it maybe 3 times, okay, above value. Now, my target is still, I'm looking for this to go into 74.06s, then 73.86s. That's the first anti-deviation low. That's still my targets, right? So now this needs to unfold, and but it doesn't really matter. I've just got my now. I don't have to really worry about risk management because my stop is at break even. Sometimes what I do is put it at break even +1. So that way, if I just make 1 tick for all of my other contracts, say for example, I'm short 4, worst case scenario, at least cover my commissions and make a little bit of profit. Does that make sense? Right, everyone following? So we're short now. Yep. So we're short. Now, all we do, now, as soon as you've got to no risk and you've hit your first profit target, all we've got to do is wait for the rest to unfold. And now we're trading our visualization, okay, our vision, okay, of this move coming all the way back down to 73.86s. Now we just got to watch that unfold with ease because now we've done the hard bit, which is taking our first profit target off and getting to no risk. That's what your main effort needs to be in. That's within the first few seconds when you get into trade. Once you've done that, then it should be just relaxed trading, just focusing on profit maximization. One of the best ways to do that is use our value area level, okay, especially when we're trading value. So let's see what happens. We continue to see sellers in the bids. There we are. There we are. Continue to hit the bids. Okay, we're cutting off the. If we hadn't taken any profits, I'll be concerned about 07s there. Okay, because the sellers just got trapped there, but the buyers lift the offer. That comes off very quickly for just a little bit of a bounce. Okay, there we are. We hit the next target, 74.06s. We hit the next target, so that's okay. Now we're at no risk. So what would you do? You could move it now. You could move your trailing stop. You could even use the volatility stop. So for example, put it here, 74.20s. I just click the button here. Okay, and that comes in automatically. Does that make sense, guys? So I want to try and stay with this, see what happens. So now we're just watching the trade unfold. So I don't really want to get too interested in. Yeah, 10 lots in gold and crude may have some partial fill. That's actually quite a lot of risk on a market that moves as volatile as crude and gold. So a lot of sellers. Look at this. Now, I talked about sometimes the market moves higher, the price moves up, but it attracts more selling. Look at this. 13s, okay, this market made a high here. Okay, look at this high volume notice here. That's why the buyer started lifting the offers above it, but then it attracted more selling. So that's good if you want to stay short. So I'll be watching for this kind of stuff to at least manage the trade. There's a little bit of more buying coming on the green, a little bit of green on the Tom South. So something that I just want to be aware of. But you know, I've taken profits around the point of control. Okay, the volume weighted average price. So I don't need to worry about it too much, right? Okay, guys, we're going to move this up a little bit quickly. Move it up a notch. I know we're taking more time than we're supposed to. So let's just speed this up a little bit, see if we unfold. We might even, what might happen now, our stops at break even, okay, or at 74.20, we might get stopped out. But worst case scenario, we've taken our +10 and our 74.06s. So if we've got short 15s, what was it, 25s, you know, worst case scenario, we took +10, +20. Even for 2 contracts, that's $300. Worst case scenario. We can't lose anything now anyway. Okay, so usually what I do is this is when I start talking about answering questions, and I start doing things in the room, and I'm saying, look, I don't really care what happens there. I've got my first, second target. I'm just looking for it. I'm just riding the runner. My next target is 73.86s, and I know that should happen most of the time because we're trading value, right, guys? Does everybody understand that? So I'm quite confident that we might get there. We might not, but you know, I'm quite confident that we might. Okay, that's good enough. Let's speed it up a little bit more. But just notice what sort of went through the thinking, what I need to look at, why I looked at 17s firstly. It's basically a place where we just saw sellers before. All I did is look for to see if they were there again. I could have got short there a couple of more times. It actually come out better for another trade the third time round. So as I said, you can be prepared to take the same trade again. But I wanted to wait for a better trade, maybe above value. Okay. And we also had that long trade earlier as well. I showed you. That was down here. Okay, so just based upon this, it's still making lower lows, lower highs. We always expect the market to stop and pause around the VWAP. So never get concerned if you sold above value and it just fluctuates around the VWAP. The market often does that. Any market often does that. Okay, it just sort of trades around the VWAP, just moves sideways a little bit. Now, if you use a volatility stop, you'll be taken out here. First thing what I do is I usually just sort of leave my stop where it is. You know, one tick below the break even, that's fine. That's what I do anyway. Now, if it moved a lot further, and it moved 30, 40 ticks in my favor, then I use a volatility stop. And especially if the market is trending, that's when I use a volatility stop. So I'm watching this unfold, Okay, watching this unfold, just managing the trade, relax, having my cup of tea or whatever it is. Just watching. Sellers hitting the bid, still sellers coming in. Oh, that's good. Look at, we're getting through the 7/4 now. Okay, all good. I want to see some more selling though. Still some more buying coming in, but you know, it shouldn't concern you now. You don't want to get too focused on order flow now. All you're now just doing is managing the trade. Okay. Yeah, high prices attract more selling again. That's good for us to retest the 74s again. Maybe this time we'll get wrecked through it. And now this is we test that 74 level a few times. Buyers keep responding there. But notice this time around there's actually not that much buying. Okay, so we might actually get through it this time around. There we are. Oh, before you know it, we've hit the target. 73.86s were there. You guys see that? And then basically by the time you've done that, that's pretty much most of your profit. You should be pretty much out of that trade. But you can see how I worked it. I had to get short here. Notice I had to get short here. I had to take a little scalp. And I thought, okay, let me just wait until I come back to above value. So I already knew where to get short at around that 30 level. Okay. I got short once and I hit my 10 tick profit target. Got taken out of break even. Then I can get a short again into the VWAP and then the first standing deviation low. That's basically all we had to do. Okay. So anyway, guys, I mean, that's just an example. And we can go on and keep doing this, but I think we've just gone on long enough. So any questions about this, guys? Any questions? Always, I mean, you guys can do this playback and just apply some of the theory, what I've taught you guys today, okay? And just go for the slides and recognize their footprint setups, understand what I've gone through, especially what I talk about in terms of psychology and doing this more unconsciously, and use the playback facility with Market Delta. It works really well, okay? It's absolutely fantastic tool, okay? Use the playback facility. Remember, you have to stop your data feed, okay, to use playback. And play it back each and every day, you know, if you miss some of the day, or maybe you've taken a couple of trades you wasn't quite sure, you know, you should have taken, maybe how you could have approached those better. You know, you can always go back and use playback as well. That's a great way to approach it. I know most of the guys that have really done well with this. Okay, now I've got a fatal error on Market Delta. Let me just unshare that. So